session as well, reporting earnings really strong when it comes to trading. That was more than able to offset some of their falling figures when it comes to wealth management. I also spoke to the company's CFO earlier, who just sounded very confident off the back of these strong numbers, also confident that China will remain strong, of course, despite some of the economic turmoil there.
Good morning, Danny. Tell us more about the Unilever story.
Yeah, so we're just hearing from Alan Jope there, and it really is all about inflation. It's all about cost. Unilever flagging that their costs in the second half are likely to be materially worse when it comes to raw material inflation, and that's going to weigh down on profitability for the second half. And they're saying that their operating margin, it's going to be in the lower half of their forecast.
And we've heard from Nokia as well then, Danny.
Right, so strong earnings from Nokia, so a lot of variation. You're getting this flavor through earnings season. The telecom operator saying that demand for 5G products has been very strong, and saying, look, despite the higher inflation, despite a lot of this turmoil and supply chain issues, we were able to manage it, deliver these strong earnings, topping estimates.
Danny, thanks very much, Bloomberg's Danny Berger. We've been monitoring comments coming through from the BOJ governor, Governor Kuroda. He is still speaking over in Tokyo. So, Mark, let's linger on this for a moment, because this has been the big FX move of the day. And in fact, the yen deteriorating further. We have heard him say a little about FX, haven't we? He's saying there's no change, that a weak yen is positive for the overall economy. And he said quite a few things about FX. I'm not sure if any of them amount to intervention, though.
No, they're most definitely not. In fact, dollar yen is touching the highs of the day right at this moment here. And you can see that is really a green light for more yen weakness, I think, to come. And we'll see that in the next couple of weeks.
Okay, so we're down by nearly 1.5% on dollar yen, 130 the handle. We'll continue to monitor these lines coming through from Governor Kuroda. We'll watch carefully the impact of Forex moves on the economy. He says short-term excessive FX moves heighten uncertainty. Nothing that's changed the thinking, it would seem, in FX markets then, as the yen continues to tumble on these lines. Just a few minutes to go then until the start of trading, Mark, and we're very much focused on the earnings story. It does seem that European equity markets are focused on some of those earnings beats, maybe, and not necessarily some of the geopolitics, which could have thrown us. Because it was interesting yesterday, we were weighed down, literally only for half an hour, though, by the geopolitics, by the threat of cut-off of gas supply to more of Europe, and then the European equity session bounced back.
Yeah, definitely. I think the reason that was is because, as we talked earlier on with Rachel Morrison, the energy reaction was a little bit more subdued than some people feared. I think many people weren't exactly sure what would happen if we saw a country cut off from gas. And as we talked about in yesterday's program, the idea that Poland was actually planning to move away from Russian gas already, Bulgaria said it wouldn't be a panic. I think that made many traders relieved. Commodities didn't panic, and that meant that for European markets, they're like, okay, we're getting really good earnings at the moment. We're getting earnings beats in Europe, but we had those great earnings overnight from Meta as well, and that's really provided a tailwind to today's price action.
Yeah, are you surprised by the impact that maybe some of these single-name stocks have in terms of their effect on markets? Because I suppose there's two things going on here. Sometimes it's a sentiment effect, and you might think there's not really much read across from one tech name into another, but sometimes these companies are just so enormous that the markets move on just their share price move.
I think the context in particular for Meta last night is that as we started seeing tech earnings disappoint this season, and that's been, in the last decade, that's been relatively rare. We have it sometimes, but not very often. But suddenly we are seeing really solid names like Alphabet miss. Oh my God, what's going on? Well, in that case, Netflix is missing, Alphabet's missing. We're seeing declining users. Meta has been a name that people have picked upon for some time, and people are going, well, that will surely be one that was disappoint. So everyone is kind of thinking that was unlikely to change the trend. So we had very, very depressed sentiment kind of going into those results. And I think the fact is they came in, growth in actual users was the most important part, and shows that these kind of legacy names, they can still grow if they have the right strategies, and that really boosted sentiment.
As we're talking, Mark, I'm watching dollar yen go weaker and weaker, or at least the yen go weaker against the dollar. So worth returning to these lines. No change that the weak yen is positive for the overall economy. So said Governor Kuroda a little while back, almost going so far as to back the weak yen then, far from intervention.
Very much so, and that's why you're seeing dollar strengthen across the board. It's the BOJ is the catalyst, but it's a broader dollar story, and the currency pair that people will panic most other markets, most other economies, is actually dollar yuan. But of course, it started with the yen and BOJ.
Okay, started with the yen and the BOJ. There's Governor Kuroda speaking in Tokyo. Thanks to Mark for spending the past hour with us, taking us through those FX moves and working our way up towards the start of European trading. This is Bloomberg.
SpiceJet 737 MAX aircraft. Earlier today said that Boeing is going to compensate SpiceJet in form of cash and aircraft. There's a big celebration happening at the Gwalior airport. As you can see, they've literally rolled down the red carpet for SpiceJet chairman Ajay Singh. There are balloons, there are flowers. This is a big deal for SpiceJet because it is the only Indian operator of Boeing 737 MAX planes currently.
Lots happening on Wall Street.
It's the basic law of economics.
It validated what the market was already pricing.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insights.
David, you just hit the nail right on the head.
From businesses most influential and instrumental.
And that's the way you run good risk management. It's a challenging dynamic.
We could continue to see that kind of strength.
Bloomberg Wall Street Week premieres Friday with replays all weekend on Bloomberg Television and Radio.
Welcome to the European market. Open, everyone. A minute to go until the start of cash equity trading. I'm Francine Lacqua in London with Tom McKenzie.
And here are your top stories. Friends with Facebook, Meta shares soar after hours as its social network returns to user growth. Twitter, Amazon and Apple report later today. EU gas demand. Ursula von der Leyen warns companies against paying for Russian gas in rubles. Germany is ready to back a ban on oil from Moscow. Plus, eyes on earnings. Standard Chartered raises its revenue outlook, and Barclays traders post a surprise jump in FIC trading. We will break down the numbers this hour.
I'm counting like 39 companies reporting earnings, and it's only 7:59 a.m. Tom, a lot of the focus, of course, on markets is what we heard from China. A lot of it is that boost that we got from Facebook, sorry, Meta, but I still call it Facebook because it's the parent company. But then the yen, of course, a reminder that there's volatility out there in global markets as it continues to sink.
That is the central bank that steals the headlines, steals the focus this morning. The Fed is out of the shadows, at least for today, and you have Kuroda, the governor, still speaking. Will continue to keep across those lines, just nailing down and battening down and reinforcing his message that there's going to be a need for continued persistent easing. He says the Japanese economy is in a very different space. They stayed on hold and they doubled down their commitment to buy JGBs, and you're seeing that impacting, of course, the yen, crossing 130 for the first time since 2002. And those are how things square up for the market open then. Decent gains that we're seeing, at least in the first few seconds of trading. Earnings, of course, front and center, as Francine was saying. And the picture looks pretty bright across most of those corporates. We'll unpack some of the details and look beneath the hood as well throughout this hour. The CAC 40 is gaining more than 1%. The FTSE 100 up 0.6%. And the Spanish IBEX gaining 58 points, up 0.7%. You also had China coming out saying they're going to do more to support the unemployed. So building on that message that they do have tools in their back pocket to support that economy amid the pressures. But will it be enough? We'll change it on now, see how things are playing out as we head up to the open stateside, of course, and look at how futures are squaring up. On a day yesterday, it was a bit mixed, the close in the US. A bit of evidence, though, of some dip buying as well as sentiment started to turn. And then, of course, after hours, that boost from Meta and the idea, or at least the prospect, the evidence that they have gained users after that disappointing previous quarter. The S&P futures looking at gains of more than 1%. Here's the Japanese yen, 130. You've seen a drop of 1.6% in just the session today. That is the first time it's crossed that level since 2002. And again, we'll keep across the comments from the Governor Kuroda. It's the yield differential pressuring the Japanese currency. Gold is also under pressure amidst generally higher yields, if not in Japan. Down 0.2%, 188 on the yellow metal. And Brent, 104, of course, down 0.7%. We continue to keep across the story when it comes to the European reaction to that decision by Russia to cut off gas exports. And Germany now apparently lining up and prepared to reduce its exposure to Russian oil. Francine.
Tom, this is a picture for a lot of the sectors. So I'm seeing quite a lot on the screen. I'm looking at it. And this is the beauty of the Bloomberg Anywhere. You can actually look at it, walk around, and have a look at what the sectors are doing. So I'm seeing travel and leisure, auto parts, technology actually on the way up. Most of the stocks are actually gaining in terms of the sector levels, apart from healthcare. That's down some 0.2%. But I am also seeing quite a lot of red. So I'm going to check whether there's a discrepancy. But what I want to say overall is that it's a really tale of whether earnings disappoint or not, and what that means, of course, for forecast. We had a good conversation with Unilever about price pressures, and it's the companies really that can pass on some of these inflationary pressures without hurting demand, Tom, that will do better than others.
And on that point, Unilever saying, look, they expect inflation and cost pressures to actually increase in the second half. They came out with earnings that beat. You're seeing gains of 0.8%. But again, a warning on inflation and what that might do for profitability for that business and margins in the second half of the year. Barclays was also a beat, and you've seen a string of wins across the banking sector, with Credit Suisse, of course, as the exception on that front. There's been volatility, of course, that they benefited from, these banking sector. And a surprise for Barclays when it comes to trading within the fixed income part of the business, gaining 1%. They do say they want to be returning cash to shareholders at the appropriate time. Glencore gaining 2%. It was a beat for this company. They benefited, of course, from high commodity prices, but there is a bit of a fly in the ointment when it comes to Glencore. They, like many of their competitors within the mining space, have had to reduce production, in their case, zinc and copper. Francine.
Yeah, nice little lifts there across the board. Let's now get over to our Bloomberg MLive managing editor. He's Mark Cudmore. And Mark, you're looking at yuan. Good morning.
Yes, Francine. Obviously, the BOJ has been the good big event this morning. Good morning, Francine. And that has been the real catalyst for major move in dollar yen. But it's really all about FX today. The move in the yen has opened up broad dollar weakness. And while the dollar yen is the big move, on a vol-adjusted basis, the dollar yuan move is as comparable, if not bigger, on the day. And in fact, what's interesting is this is the one that's going to have more implications for global markets because it's so important in global trade, and China is so important in the demand for global commodities. Now, the important thing I want to draw attention to this is that when the yuan trend changes, it changes for the long term. In fact, my colleague Simon Flint and my team has done a great model showing that it actually has higher autocorrelation than the 20 top currencies and compared it against. What it means, basically, it trends more than any other currency. And you can see that quite easily in the image. If you look since it depegged in July 2005, in the last 17 years, there was like the one big trend of yuan appreciation. Then obviously this is dollar yuan showing. So when it falls down, that means yuan appreciation. Then we got the depreciation into the Trump presidency. Actually, when Trump became president, we saw yuan appreciation again because the PBOC were trying to keep Trump happy. And then the trade war really bite. And then we see that's the yuan depreciation. And then since the pandemic, yuan appreciation again. And now we started this near vertical move. Most likely this means we're going to go an awful lot higher. And I know most people don't think it yet, but I think 7 is in play for dollar yuan later on this year because the market is really going to start chasing this trend in the coming months.
All right, 7 in play for dollar yuan. Keep an eye on that line then. Bloomberg MLive managing editor Mark Cudmore, thank you. Let's get into some of the other key market drivers then. We'll stay with currencies as well. Our markets editor Christina Kino. And let's start then with the strength that we're seeing in the greenback. Tina, we talked about this when it comes to equities. There is no alternative. Is the greenback now falling into that category for you?
I really think so, Tom. I mean, just when you're looking at the broad currency complex, all we're seeing is weakness across the board for various different reasons. I mean, Mark was just talking about what we were seeing in China. Of course, that is a function of what we're seeing in the Chinese economic outlook, which is not great at the moment. And then, of course, there's the yen story, which really is playing out today. And the BOJ really driving that in a lot of ways with their still quite dovish stance, especially when compared to the rest of the global central banks that are moving toward tightening. And then in the rest of the other regions, in Europe, for instance, we saw euro really take a beating yesterday because of the latest Russia developments, with Russia upping the ante on gas supplies to Poland and Bulgaria. All of this is just amounting to a lack of alternatives in the currency world beyond the dollar.
I love the fact that Tom McKenzie can actually ask Tina with a straight face without breaking into a Tina Turner song. So that is another issue.
I'd love to see that, actually.
I would love to see that. Best song, your favorite song in 2 minutes. But in the meantime, we also need to talk about China, because if you look at the earnings complex, it has a lot, China could actually scupper all of the good wishes of some of these companies.
Absolutely, Francine. And I think they're very, very aware of that. Whether you're looking at bank earnings or some of the earnings from consumer-focused companies, they're all very clearly really worried about the China outlook in the next few months. And so even if, for instance, we're getting some great earnings from some of the banks here, benefiting from really that trading boost in the first quarter, lots of volatility, as we know, lots of money changing hands, which is great for banks always, they are still worried about the outlook for China, especially as the lockdowns continue, the economic situation not necessarily taking a turn for the better just yet. And so I think there really is going to be a lot of caution on the China story moving forward, something that investors should remember as well, even as they're looking at some better earnings this earnings season.
Yeah, it strikes me that some of the other events across the world may be distracting investors from the reality on the ground in China and what it means for those particularly European corporates. When it comes to what's happening in the bond space then, we didn't manage to break through 3%. We got close to it a couple of weeks ago. You're currently on the 10-year at 280. You've seen a move lower today of about 2.5 basis points. Is the next catalyst the Fed meeting? And have we capped out in terms of the moves that we've seen in yields?
Definitely the Fed is going to be the next one to watch, Tom, because we do have that big May meeting coming up next week. And this is the biggie, right? This is the one where we see, is the Fed actually going to deliver what they say they're going to deliver, which is 50 basis point rate hikes, something that we haven't seen in a while. But yeah, I mean, how that's playing out in bond markets, we know that bond markets have anticipated this well in advance. That run up in yields really had been driven by that repricing for the Fed. We could well see a sort of a sell the rumor, buy the fact situation in bonds, where as soon as the Fed meeting hits and we get that 50 basis point rate hike, as most market participants expect, we could see a bit of a relief rally in the bond market counterintuitively, because we finally got there, you know. And as we know, the argument has been made that these are now great levels for bond buyers to buy back in. It's finally giving some investors return over inflation, at least in the US, and potentially could set up bonds for at least a bit of a rally in 2Q.
Finally, maybe, possibly. Christine, thank you so much. Christine Aquino there, our Markets Live editor. Now, let's also look at what Governor Kuroda is telling us. So the Bank of Japan certainly sparking a sharp slide in the yen by doubling down on its promise to defend this rock-bottom yield target that's leaving it as a dovish outlier. I mean, something that's been quite surprising, and of course,
remarkable.
It's a real divergence play.
Yeah, it's incredible. So 1.5% drop in the yen just in today's session, 130 now, 37, and Kuroda's just kind of doubling down on this message of the need for persistent easing continuing. And it's remarkable that the inflation dynamics in Japan remain so disconnected what we're seeing globally as well.
Yeah, and the other, of course, interesting bit is that they're really the ones that ignored market chatter of what they're expecting to do, so they're not afraid of going against what the market is expecting of them, unlike maybe some of the other big central banks. Now let's get also some earnings news. Meta platforms, i.e. Facebook, reported after the bell, dispelling concern of user situation on the legacy Facebook platform. Now the results calmed investor nerves following Alphabet's results, which were dragged down by YouTube. Bloomberg's Laura Wright joins us with the very latest. Hi, Laura, good morning. What were the key takeaways?
Well, as you say, investors' nerves were assuaged. That led to a surge in after-hours trading of more than 18%. A fractional miss in advertising revenue, a fractional miss in overall revenue. But look, the majority of the headwinds were already priced in. Those Apple privacy changes, the war in Ukraine, competition from TikTok. That's where the Gen Z kids and also Francine Lacqua place themselves. We have seen a decline in average revenue per user. It was the lowest this quarter since the third quarter of 2020. But that's because Meta platforms, they're pushing advertisers toward Reels, which is their challenger platform to TikTok. But millennials, they're fighting back. The legacy platform Facebook saw an increase of 31 million daily active users in the first quarter, as you mentioned, dispelling concern of declining user growth that we saw in the previous quarter.
I don't know many people who use Facebook anymore.
I'm back
Instagram,
on Facebook.
You're the maestro of Instagram. You're back on Facebook.
I try. I feel like I'm the millennial of newsroom, but I'm back on Facebook, weirdly.
All right. We'll continue to watch that. Check in on the effect, if you have the privileges, of course. Instagram, well worth watching for Francine. What happens with the Meta platforms then, Laura? What are we looking at?
Well, Sheryl Sandberg, the COO, she sees the future very much in Reels. It's a multi-year journey. 20% of time spent on Instagram is on Instagram Reels. Now, the push toward the metaverse, that is going to take a significant proportion of investment and spending. And Mark Zuckerberg revealed he thinks it could be 10 years before the metaverse reaches profitability. The Oculus gaming headset, that was released last year. And listen to this. Facebook this year are releasing a virtual reality work headset. Mark Zuckerberg says that could replace the traditional desktop computer.
It's like a hologram, Laura, isn't it? Tom McKenzie hologram.
It's a whole different universe. I mean, maybe next quarter we'll be speaking to each other through virtual headsets on set.
You need to get some Oculus glasses, clearly.
Or not.
Or not. Or not. Okay, there we go. Bloomberg's Laura Wright breaking down what's happening. Of course, Meta, their new innovations coming down the pipe. Of course, we will decide whether or not we get Oculus here on set. Coming up, Unilever has reported underlying sales for the first quarter that beats the average analyst estimate. We're going to hear from the CEO. This is Bloomberg.
Companies now, they're getting hundreds, maybe even thousands of applications. So software has come in to automate the process.
You want to write your resume for robots, not for humans. The only job your resume has is to be comprehensible to the software that is reading it, because that software or robot is going to decide whether or not a human ever gets their eyes on it.
These things are programmed by a certain segment of the population that might not be totally inclusive or not be fully aware.
Concerns about how this technology could exacerbate discrimination. For the FTC, I think foremost, the FTC needs to be making sure that we're fully understanding this technology.
We don't trust companies to self-regulate when it comes to pollution. We don't trust them to self-regulate when it comes to workplace comp. Why on earth would we trust them to self-regulate AI?
Front Row, exclusive interviews with the most influential figures in finance. Lloyd Blankfein.
Deflation is a terrible thing. Inflation you could tolerate.
Kathy Wood.
Tesla will be in the pole position to dominate.
Jeremy Grantham.
We've had a very, very abnormal honeymoon Goldilocks period.
First available on the Bloomberg Terminal, then on Bloomberg Television and Bloomberg.com. Front Row, the best seats in the house for business's greatest minds.
Welcome back to The Open, everyone. Well, let's get to a key earning interview. Unilever has reported underlying sales for the first quarter that beat the average analyst estimates. The consumer goods giant, though, warns that raw material inflation will be worse in the first half because of the war in Ukraine, weighing on profitability.
We are seeing inflation across basically all input costs, agricultural commodities, petrochemical derived materials, freight, distribution, energy, labor. And therefore, the majority of the sector's growth and our growth is coming from pricing. At the moment, we're not seeing down trading, but one of Unilever's strengths is we have a portfolio that typically offers a good, better, best alternative in each category. And so we cover that risk a little bit by having offerings at the lower price points for people who are feeling the pinch from inflation these days.
Yeah. Is it changing consumer habits? Do you see any patterns of people buying maybe some of the more expensive, premium, but also much more of the cheaper offerings?
Well, we're very sensitive to the pressure that household budgets are under right now. And you're quite right. We're seeing both things happening. There is up trading going on as people treat themselves to a little luxury when they don't have the ability to invest, for example, in a holiday or a new durable good. But also some down trading. And the down trading that we've seen has been particularly in Latin America and a little bit in Europe. Overall, though, in the world, we're not seeing huge shifts in consumption other than people obviously having to carry the inflationary costs that are being passed through.
So how much more do you think inflation can go up? And again, what does it mean for your input costs?
Yeah. We had guided 1 quarter ago that we saw input costs for the year increasing for Unilever by 3.6 billion euros. We've now upped that estimate to 4.8 billion euros for the year. We're largely covered now on those costs. But I don't have a crystal ball on what the future holds. I'm not sure when peak inflation will be, and therefore we're putting a higher priority on agility and our ability to respond than we are on predictive ability.
So how long do you think you can put prices up for?
Well, you know, I think at the moment we're in a period of extreme inflation, and we will continue to take some price through the rest of this year. Our plans beyond that are for much more moderated pricing, but I don't think we've seen the end of price increases from us or other players in the industry for 2022.
What are you currently doing in Russia? What's the situation like on the ground?
Yeah, our first concern, of course, is for our team in Ukraine, who have done a magnificent job. They're all safe, well accounted for, and quite remarkably, they've got our business back up and running in Ukraine. As far as Russia, when it comes to Russia, we want to be part of international sanctions. We have ceased all imports and exports of products in and out of Russia. We've curtailed any further capital investment into the country. We've stopped all advertising spend, and we will not profit from our presence in Russia. Frankly, our only concern there is not a commercial concern. It's to secure the safety of our people on the ground in Russia as well. Russia represents about 1% of Unilever's turnover, so the commercial materiality is not significant. This is really about complying with international sanctions and protecting the well-being of our people on the ground there.
Have you had any discussions with Russian authorities on what they would do with your operations? Again, we're hearing that, you know, they could put some of their own chief executives in charge of some of these, you know, for example, your operations in Russia, or even nationalize them.
You're exactly right, Francine. The Russian authorities have been crystal clear that companies operating in the country have got 3 options. The first is to continue operations, in our case, albeit on a very curtailed basis. The second is to transfer ownership to a Russian business. And the third is that any kind of exit will be seen as abandonment, and the Russian authorities have indicated they will seize and nationalize not just physical assets, but also intellectual property. And for us, that means our brands. And so, oddly enough, the way we think that we're best able to protect our people and maintain pressure on the Russian economy is by maintaining a minimal presence in the country.
Well, that was the Unilever Chief Executive, Alan Jope. We talked about Russia, we talked about inflation, Tom, and at some point, if you put up your prices too much, you know, certain parts of the world will, of course, go to cheaper brands, and that's the main conundrum for Unilever going forward.
Yeah, the move from consumers, of course, as they look to reduce the costs that we're seeing, particularly acute here in the UK, but other jurisdictions as well, of course, the cost of living crisis. That, of course, has implications for corporate credit as well, and how vulnerable certain parts of the corporate credit space are, particularly as financial conditions start to tighten at a macro level. This chart shows what's been happening in terms of high yield investment grade and high yield. Just since, we'll start in 2020, you saw very peaks around March of 2020. It comes down, and you're seeing these 2 lines suppressed. So the white line is high yield, the blue line is investment grade, suppressed through 2021. The yields are starting to edge up. The question really is to what extent corporate credit has priced in the moves around the asset purchase program from the ECB. They have said they're going to be ending that program, and then of course we've had officials coming out from the ECB saying that they are going to be looking to raise rates back to 0, possibly by the second half of the year. So financial conditions will be tightening, it seems, within the Eurozone at a time, of course, when there is the conflict in Ukraine. What will that mean for the corporate credit space, and how much of this has been priced in? Let's bring in Tatiana Grail-Castro, a portfolio manager and co-head of public markets at Muzinich. Tatiana, what is your take? To what extent are the moves that we're seeing from the ECB, at least the planned moves, particularly around the APP, have been priced into the corporate credit space?
Yeah, good morning, everyone. You know, clearly it has been well flagged already a few months ago that APP is coming down. So first, actually, APP was stepped up in response to the PEPP being concluded in March. So we have seen this rise up in near term, but at the same time, there is the expectation it will peak out over the summer. So it could be June or July latest. Most market participants think would be at the end of the summer. So, and you would think that this has been anticipated already a few weeks ago, or even before the expected announcement. But actually, what we see is that as the ECB is stepping back and the bond purchases are getting smaller as the APP is declining, we now see the impact. And I would think that it's just because the
Tatjana,
yeah.
So what kind of levels are you looking for yields when it's fully priced in, or when the market shifts? What levels are we looking at?
Yeah, so that's the question. So we have seen a big spread widening over the last few days. So, but it doesn't feel to me that we have reached the sort of the wides yet, because there is a lot of market sort of hesitancy to bid for the European assets. And so I would see near term that there could be continued pressure, and that is just because this price insensitive market participant and continues to pick up about 50% of the bids at the moment. So even so, we know that this big player is retrieving its presence. It's still felt, but clearly it will be felt less and less so. So I would see the continued near-term pressure. So we have seen significant spread widening over the last few days, but I think we're not quite there yet.
Okay, so that's spread widening.
Reactions.
So that spread widening is set to continue. Which sectors are most vulnerable at this point as we face up to slower growth in Europe?
So with the APP, clearly, there's the expectation. What we have seen is that it has, and as you pointed out also, Tom, that clearly the ECB is not buying high yield, but it has an indirect impact on the overall market, because we look at it in terms of relative value, and a lot of investors were pushed into riskier assets. So the impact clearly is there on eligible bonds that are no longer being bought, but the ripple effect is much broader. So we do expect that the whole market is impacted by the retrieve or sort of the ECB leaving the market, and so it should have wide impacts in terms of sector. That is clearly based on the earnings. Yep. And the sector's ability of, how they affected they are, how hedged they are, and how they can pass on to their consumers or to their clients.
Tatjana, how much more constraints do you see on supply chains, and how much of a shift will that be for markets?
So we are very focused, and this is the market, clearly on the lockdowns in China that are significant. And in Shanghai now, the lockdown has been in place for a month. It could take another month, and it's a severe lockdown where people are not allowed to leave their homes, or they're locked into their offices. But clearly, to the extent that it requires them to be out and about because they're not service-driven but product-driven, that really has a significant impact. And we can see now already many other cities that are preparing for those lockdowns because they want to avoid those really harsh lockdowns that China is implementing. So that is expected to have an impact. But then clearly, as we discussed and was said by Unilever earlier, then there is also the conflict and the impact that has on supply chains, and the overhanging issues of will there be a cut of gas, or the European Union is stopped buying gas and oil from Russia at some point. I think that the last word hasn't been said on that, and clearly that would be a huge impact. So I think overall it is probably prudent to be cautious around spreads at the moment.
Tatjana, thank you so much. Tatjana Gray-Castro, they're a portfolio manager and co-head of public markets at Muzinich & Co. Now, coming up, the EU prepares its response to Russia's threat to cut off further gas supplies to Europe. We talk geopolitics with Julie Norman from University College London. That's coming up next, and this is Bloomberg.
know that it's highly transmissible. We know that 2 doses of vaccines, Pfizer vaccine specifically, neutralize the virus, but not as efficiently, because various studies showing that reduction up to 40-fold, meaning that a 3rd dose is a must for it to successfully neutralize the variant. What we don't know is still that what are the effects of mix and matching between vaccines, and what are the capabilities of antibodies produced from this mix and matching in neutralizing Omicron. Because as we know, many parts of the world use different types of vaccines. And that would be a great data to look at. It will be also great to look at, because majority of the studies done uses a small sample number, and most of the time when you translate it to real world, the data changes. So it will be really good to look at large-scale data of the ability of antibodies from vaccines to neutralize this variant. Grateful here today that the virus, Omicron variant, still uses ACE2 receptor as its main entry. It means that all of the vaccines which are designed with spike in mind still works. Imagine if it uses a different receptor other than ACE2. None of the vaccines would work today. So I think that is the best news that we got from all these studies which came recently, the past couple of days.
Wherever you get your news.
This is Bloomberg Daybreak with Lee.
On Bloomberg Radio.
Welcome to Daybreak Australia. This is Bloomberg Technology. This is Bloomberg Green.
On TV, radio, and the web, this is Bloomberg.
Welcome back to the Open, everyone. 30 minutes into the European trading day, and here are your top stories. Friends, with Facebook, Meta shares soar after hours as its social network returns to user growth. Twitter, Amazon, and Apple report later today. Yen slumps. Well, the currency slides as BOJ doubles down on bond buying. Traders watch for talk of intervention. And EU gas demand Ursula von der Leyen warns companies against paying for Russian gas in rubles. Germany is ready to back a ban on oil, a gradual one from Moscow. Tom, if you look at the markets, I mean, I'm absolutely fascinated with yen breaching $130 per barrel. Sorry, per barrel. I'm all over the place. Per dollar, with Governor Kuroda saying, no, they're continuing along their path.
They will persist with this easing.
Per dollar.
That's what's needed.
Save me with an espresso.
There's a link there between oil and Japan, right? Big importer of oil. That's part of the inflation mix. You strip that out, they don't have inflation. That is why they can persist with the quantitative easing. 130, as you say, first time they've hit that level since 2002.
Tom McKenzie saving me every day, every hour.
The Bank of Japan and Kuroda, Governor Kuroda stealing the limelight again. And it's been a choppy week again for investors in these markets. And like how you get a grip across these equity markets. You're seeing very solid gains now. It's risk on. You're seeing a move out of treasuries, a move out of European sovereign debt, and you're seeing those yields coming off. And across the equity space, what I should say is you're seeing a bid for bonds, and the yields are coming off. Now I'm confused. Bid for bonds, yields coming off. Equity markets performing pretty well, though. Gains of more than 1% across the benchmark. The DAX is higher. Look at that, by 1.5%. The FTSE 100 gaining 0.7%. And renewed focus on earnings. And you just need to look at the likes of Barclays and Unilever, Glencore, Standard Chartered, just a few of the names that are reported today. Those are all beats on the top line. They have their own idiosyncratic stories, of course, when you lift the hood. But nonetheless, the overall story remains that earnings are beating, and that seems to be giving some relief to these markets as, of course, we continue to keep an eye on what's happening in China, but also Ukraine. Let's switch it on and see how things are kicking over then when it comes to sectors, sector by sector. Every single sector in the green this Thursday morning. Top of the list, autos and parts, 2.3% gain. Technology also high. You had that, of course, beat from Meta, the parent company of Facebook. Travel and leisure also high by more than 2%. At the bottom of the list, a little bit more muted when it comes to media, retail, and healthcare, some of the more defensive sectors. Certainly healthcare has been one of the picks amongst many of the strategists who want to find a little bit of defensiveness within equities. So that is how things are shaping up. 30 minutes into this trading day this Thursday. Francine?
Yeah, the Riksbank, Tom, really making one of the most dramatic monetary policy shifts since Stefan Engqvist took charge of the Sweden Central Bank in 2006. They've just said that they will raise their key rate to 0.25, and they will actually also raise it a further 2 to 3 times this year. Now, economists were less convinced that actually they would go ahead with this, though there was a lot of this baked in simply because of inflation. So less than 3 months ago, again, officials stood out from the tightening warning trend by global counterparts by effectively ruling out interest rate hikes before 2024. Investors now saying, right, well, they've also had to align themselves. So put that in the context of what we're hearing from the BOJ, and yen just got a lot more interesting.
Yeah, it really did. Just checking in on the yen again, 130.35, so a drop of 1.5%. And of course, the Riksbank coming out with this move and this decision at a time, of course, when we've heard from ECB officials turning more hawkish. We were just talking with Tatiana Grau-Castro about the end of the asset purchase program, what that will mean for financial conditions in Europe as you move as well to a rate that gets to zero by the second half, according to the views at least of some officials. So this is the lines from the Riksbank coming out, the redhead. Rates will be raised a further 2 to 3 times this year.
Yeah, and I think we had the Krona chart. It definitely surged on the back of that surprise rate hike. Now, the EU is preparing its response to Russia's threat to cut off further gas supplies to Europe. Ursula von der Leyen, the president, warned companies not to bend to Moscow's demands to pay for gas in rubles, as that would be a breach of sanctions. Now, that's despite a Bloomberg News exclusive suggesting at least 10 European companies have set up ruble accounts. Well, joining us now is our Europe correspondent, Maria Tadeo. Maria, first of all, I'm hearing a lot of companies say, look, it's unclear whether there's a workaround this and we can pay in rubles doing a certain thing. And they're asking for clarity from the Commission. And the Commission says, well, we've been clear, you just can't pay in rubles.
Yes, Francina, you can see why this is very confusing for everyone. The reality is the only thing that's certain now is that Russia is now engaging in gas as geopolitical weapon, and this is escalatory in this conflict with Ukraine. But when you look at the reality on the ground and the paperwork, the lawyers here are going to have to work overtime. When you look at the Commission, they say yesterday, yes, it would be in breach of sanctions. Anything that facilitates rubles would be a problem. But for companies, they say, well, if we pay Gazprom Bank, which is not sanctioned and has not been cut off from the SWIFT, then where's the problem? So at this stage, there's a lot of confusion here. I don't think it's easy for companies to navigate this. And in fact, there's pressure, not just from companies, but also from officials. Yesterday, European ambassadors actually had a meeting here in Brussels, and they urged the Commission to issue new guidance. And Francine, the idea is that in about 3 hours' time, there is an expected press conference from Ursula von der Leyen, and she is believed to come up with some explanation to this. But again, Francine, it's very unclear. I don't think anyone has an answer at this point.
Maria, do we have any clarity if this is taking Europe closer to a full energy embargo on Russia?
Well, what we know is that this situation, of course, is creating tension between countries that say we would pay in rubles. I mean, Hungary has come out on the record many times saying that for them it would not be a problem. We know that 4 potential buyers also looked at those type of accounts. Of course, you pay in euros, Gazprom would do the conversion, but in reality, of course, you're helping Russia to not just prop up their currency and their reserves, but also sidestep some of the central bank sanctions. So this is creating at this point tension between the EU 27. So, of course, it's testing that unity. The criticism is that Russia right now is doing divide and conquer between the different member states. And it does bring a very fair point here. Is the EU going to front run potential moves from Russia by going, I'd rather embargo first before you cut it off? Keep it in mind, there's a deadline coming up in mid-May. Or do they wait for the Russians to make a move and then respond? But I think the key issue for me here is that Russia has been very successful over the past 48 hours to really test the limits of this partnership between the 27 members of the European Union, which until now had been very united and had put on a very united, effective front.
Okay, testing the unity of Europe. We'll continue to watch that. Thanks, as ever, Bloomberg's Maria today on the ground in Brussels. Joining us now in the studio, Julie Norman, co-director of the UCL Centre on US Politics. Julie, thank you for joining us on set. There was the view amongst some that this invasion would never happen because it would be against Putin's own economic interests, Russia's own economic interests. There was a view amongst some that cutting off gas supplies to Europe wouldn't happen because it was against Putin's and Russia's own economic interests. Have we once again misunderstood the non-economic motivations of Vladimir Putin and indeed the Russian people?
Well, Tom, you said it, that just from the start, we've known that the reliance and the dual dependence on energy between Russia and the EU was probably going to be weaponized at some point. It was probably more a question of when rather than if, even though at the beginning, maybe some didn't see this coming. But as we've heard really from the start with NATO countries, a lot of discussion on if there's going to be a complete energy embargo. That's something that obviously there's been reluctance to do. Some European countries, almost 50% dependent on Russia. But what we've we've seen over these last few days is really an acceleration of needing to make that choice or not. Russia making this initial cutoff of Bulgaria and Poland, two states that can weather this cutoff a little bit better than perhaps Germany, Italy, some of the others. Poland's already been trying to wean off Russian dependence. But the bigger question is, what would this mean if Russia takes this another step, if they go after countries like Germany, and can we preempt that in some way?
I mean, it's a difficult question because finally you kind of test the resolve of European countries, but also of Russia. Can Russia sell this to anyone else? And is there anything that the U.S. can do to try and support Europe as they try and transition?
Yeah, well, absolutely. So again, this is both, Russia needs the revenues as well. And so that's something to be keeping in mind here also. What we've already seen from the U.S. point of view is trying to shore up alternative supplies for Europe to be able to kind of make the first steps and put Putin on the back foot rather than the way around. The U.S. has already started to try and supply liquefied natural gas to Europe. They've tried to facilitate discussions with Qatar and other Gulf states to do the same. All that's going to be a bit of a more time-consuming process, but those conversations are definitely happening and have been for quite a while.
When it comes to that embargo, and of course Maria was talking about the fact that maybe the needle is moving a little closer to a full energy embargo, if not now, then maybe in the medium term from Europe to Russia. Do we have to remind ourselves as well of the history of sanctions, the efficacy of sanctions, and the history of oil embargoes? You just need to think back to Japan and World War II. The implications of this, to what extent are Brussels policymakers grappling with this issue?
Yeah, it's a great question, Tom, because in the short term, there's obviously the urge to do everything we can to stop this nearly $1 billion a day going to Russia. But at the same time, sanctions do have long-term effects that are often counterproductive. It can often strengthen the state. It can strengthen an autocrat like Putin. It can increase his own popularity. It can push a state closer to develop their own state industries or to push them closer to other states like China. So there's a lot of long-term effects that will need to be balanced with the short-term aims of sanctions as well, and all that will need to be thought out.
Julie, I mean, the U.S., I'm sure, is looking at this, and their biggest problem is probably not really Russia, apart from the immediate, of course, impact of the war, but China. How do they try and get China on side to make sure that there's not then a new bloc forming, which they have, which is very antagonizing against the U.S.?
Yeah, it's a great question, Francine, because China has been such a wild card throughout this conflict. In whichever way they lean, if they lean in hard to Russia, that could really be a game changer. China has been trying to slow walk this to some degree. The U.S. has obviously been putting pressure where they can. There's been some discussion of secondary sanctions, but I think that would be a little bit difficult to actually implement with China, but it's something that's being discussed. But again, China needs the U.S. and even more so the European markets as well. So there's some interest for China not to completely jump on the Russian bandwagon either. And so there's leaning into some of that leverage also.
There was discussion at the beginning of this conflict, almost 2.5 months ago, that you'd have to provide an off-ramp to the Russian president. It seems that off-ramp has disappeared. There is no off-ramp. The discussions have dried up. Is that still something that is needed at this stage of the conflict? And is there anything that stands out to you that could provide that?
It's such an important question, Tom, because, right, initially we were trying to find those areas for a diplomatic solution, for some kind of compromise for Putin. The stakes have definitely been raised by essentially Russia's own actions, the atrocities and the war crimes that we've seen, but also just the continuing offensive. I think Western states had been trying to defer somewhat to Ukraine with how much to kind of push Russia on the diplomatic effort as well. But the truth is Putin is not interested in negotiating. So any of those off-ramps that were even on the table are not being taken up at the moment. With that said, I think we do need to keep some kind of long-term compromises in mind, because ultimately there will need to be some kind of resolution to this, probably in the further rather than near future. But there will need to be some kind of considerations regarding territory, regarding membership in EU, if not NATO, and security agreements around that. So all of those are still very much being discussed.
Julie, is the main, I guess, longer-term concern for the U.S. is that countries that could have a difficult relationship with the U.S. would just buy less treasuries because of the sanctions. I mean, this was actually a huge deal, and we haven't really understood the third, fourth round effects, longer term, on what it means for the U.S. economic standing in the world.
Yeah, well, absolutely. And I think that's one reason why the U.S. has been reluctant to push too hard into secondary sanctions just yet, because Russia is such an economic superpower as well as political. They're so intertwined. To have really half the world needing to go against some of their current economic interests to try and line up behind the U.S. could create some difficulties for the U.S. as well right now.
Julie, thank you so much as always. Julie Norman there, co-director of the UCL Center on U.S. Politics. Now, coming up, we round up very busy, very, very busy so far this week. European bank results with Magdalena Stokolza, head of European Banks Research at Morgan Stanley. That's coming up next, and this is Bloomberg.
City of Jamnagar is a money-making machine for Asia's richest man, Mukesh Ambani. His company Reliance has the world's biggest oil refinery complex here in the city. Jamnagar is also where Ambani is making his newest bet, a $10 billion investment in green energy. His ambition is closely aligned with the Indian government's plan to reach net zero emissions by 2070. But Ambani is not alone. India's second richest man, Gautam Adani, has committed $20 billion of investment over the next decade. But India's massive dependencies on fossil fuels have some environmental advocates questioning the realism and sincerity of those green ambitions and those of its two biggest billionaires.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
Why do the biggest names in business choose Bloomberg?
That is a great question.
It's a great question.
It's a great question.
Great question.
Great question.
Great question.
Great question.
That's going to be the best question I get all night.
I'm glad you asked that.
Bloomberg Television. Top experts. Great questions.
Welcome back to The Open, everyone. Let's focus now on bank earnings. And we've heard from major European lenders this week, HSBC, Barclays, Credit Suisse, and UBS. Now let's break down the results from this sector with Magdalena Stokolza, head of European Banks Research at Morgan Stanley. Magdalena, thank you for joining us. I don't know whether you can break down in regions, because even if you look at some of the Swiss banks, it's very different if you're actually a UBS or you're a Credit Suisse. Who will benefit the most from this rates environment going forward?
So I have to say that the banks trade is all about kind of interest rate versus credit cycle, and of course different regions are going to react very differently, as you've just mentioned. So the regions which are the most kind of rate sensitive here, and slowly we're getting those results, are Spain, particularly domestically, domestic UK. But of course, you're right. I mean, Swiss banks, wealth managers, global wealth managers are going to benefit quite significantly from US rates. And we are slowly starting to get kind of increased targets from the perspective of net interest income growth, particularly in the second half of the year for them as well.
They've also benefited, a number of them, and this was reinforced by what we saw from Barclays today and Deutsche Bank earlier in the week, from a pickup in trading volatility and the trading parts of those businesses doing very well. Do you see that holding and sustaining through the rest of the year?
Yes. No, a very good point. And particularly within the fixed income trading, and within that, of course, kind of macro effects commodities as well. Absolutely right. And I have to say, the numbers out of Barclays, out of Deutsche, were very, very strong in this regard. So, I mean, it's always tough to forecast the trading line for the investment banks. But I have to say, we have to assume that the volatility remains quite elevated for for the kind of foreseeable future, and it will continue to be quite supportive of those particularly macro trading business. I do believe that there is some longevity there.
So, Magdalena, do you simply make then the difference between more, the banks skewed towards the retail investor and the ones that have that investment bank capability?
So, yes, I have to say, fundamentally, when I look at the banks, let's just say kind of 3 quarters forward, I have to say that I do prefer retail banks as an investment here, because they are likely to benefit from the interest rate side. I do believe that the consumer, despite of the inflationary pressures, is likely to actually hold up relatively well from the perspective of the asset quality. On the investment banking side, we're going to have a lot more cyclicality in those revenues, because from one side, as we've discussed, we are likely to have the continuation of strong, let's just say, fixed income trading. But for example, equity trading was weaker, or the actual investment banking volumes, particularly in equity capital markets, have been very, very weak. Literally, kind of the volumes in ECM were down more than 70% kind of year on year in the first quarter, and that's quite unlikely to change. So I have to say, if you're looking for kind of quality, less volatility in earnings, I would still stick with the retail banks.
Just briefly, Magdalena, what does this mean for market share? Is this the year when European banks finally can carve out some of that market share that they've lost to their US rivals over the last few years?
It's always a very interesting question, and I have to say, throughout 2021, that market share in general between US and the European banks have actually stabilized. And I think if it wasn't for a kind of huge restructuring in Credit Suisse, we would have actually even seen it see them slightly clawing back that share. But I have to say, it's been 12 months already where that share remained stable, so at least stable.
Okay, maybe as stable is as good as we can get with European banks and their market share. Magdalena Stocklosa, excellent insights. Thank you for your time. Head of European Banks Research at Morgan Stanley. Okay, coming up, we break down the collapse of Archegos Capital after its co-founder, Bill Huang, was arrested and charged with fraud. This is a fascinating story. That is next. This is Bloomberg.
When you think space, you probably think one space agency that travels under the radar is ESA, which is surprising considering what the European Space Agency has achieved and how vital it is to the global space industry.
We've collaborated with pretty much everybody who is involved in space exploration.
ESA wants to be a leading force in furthering humanity's mission into space.
Commander Ground, do you copy? Copy.
If we want to have successful human missions to Mars, we are going to have to learn to live and work off-world in a different way. The place where we are going to learn to do that is on the moon.
Can ESA help humanity take its next giant leap?
I
I think what we've seen during this period of time is that communicating via video is not a fad. We are using it in all aspects of our lives, for work, for learning, for communicating, for staying in touch.
This is a market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
Welcome back to the Open. We are 53 minutes into the European trading day. It is risk on for the equity markets. Gains of 1.2% across the benchmark European stocks, 600, and your future stateside pointing to gains of between 1.5% for the S&P E-minis and 2.3% for the Nasdaq futures. Francie?
Now, the Archegos trading debacle is still being felt on the balance sheet of financial institutions. And now the man accused of being behind it, Bill Hwang, has actually been arrested and bailed on a $100 million bond. Now, he denies any wrongdoing. Joining us now to break down all of this, to break down the charges, is Michael Moores. He's Bloomberg's managing editor for EMEA Finance. Michael, I mean, this is, first of all, amazing, because this is the first account of actually the people that have been investigating him. And it's like a novel. I mean, it's something out of like a John le Carré novel about how he rose and then went down. I mean, what does it tell us about the risk taking at some of the banks?
Yeah, I mean, it shows that the banks were pretty unaware of the risks he was taking at other banks. I mean, that was the big thing. They each thought, well, we're the main player here. And when you put it all together, it was a huge exposure, bigger than anyone even knew, 160 billion worth of exposure to stocks, you know, starting out from a fortune of about $1 billion. So just massively leveraged and continued to lever up as the stocks went up.
What do we know about the charges then from US prosecutors for Bill Hwang and the CFO?
Yeah, numerous charges, all carrying big sentences. So it mostly boils down to fraud and market manipulation. Those were kind of the two major themes of all the charges, saying that he was trying to pump these stocks up and that he lied to the banks to get more leverage to do that.
Where is compliance in this? He's misstating, this is the accusation, misstating the value of some of the assets at the family fund to these banks. Where is compliance checking on this?
Well, I mean, there certainly were bank compliance lapses. We saw that, you know, Credit Suisse did their own report last summer on how they lost the most money in this, and there were numerous failings there. But then you also, you know, according to these allegations, also had Archegos lying to the banks about what their positions were and how invested they were.
I mean, it's just so wild. Like, if you look at the numbers, like at some point they had positions of like 160 billion in stocks. How did he think this would all end?
I mean, that is the big question, and Matt Levine had a great column about this yesterday. Just how could it have ended any other way? Because it from the documents, it appears that right up until the very end, they were continuously pouring every cent they made back into bigger and bigger bets on these stocks.
Okay, Michael,
amazing.
On that amazing
What a
case.
story.
Yeah, we should reiterate, of course, they have pleaded not guilty, both the CFO and Bill Hwang in this case. We'll continue to watch it, Michael Moore. Thank you very much indeed.
Now, that's it for the European Market Open. Surveillance Early Edition is up next. We look at markets, we look at yen, we look at yuan, we look at all of the currencies and how that plays out. And then we have, 390 companies reporting earnings. So we'll look at banks, we'll look at Unilever and many, many more.
Yeah, indeed. And so far, the report card for the earnings has been pretty positive. There's been a bit of dip buying. It is risk on across these markets. The future stateside pointing to pretty decent gains. So the S&P E-minis of more than 1%, but it's the Nasdaq futures. It is the technology sector that has taken the lead at this point. Stay with us. This is Bloomberg.
When you think of cutting-edge technology at sea, you might be thinking of stuff like this. But there's an incoming revolution on the high seas that isn't quite as sexy, but could be significantly more impactful.
Container shipping is the key component of global trade. About 80 or 90% of all the world's goods are transported at sea at some point.
But there's a significant unseen cost to the modern era of global commerce.
About 3% of all the world's CO2 emissions come from shipping.
3% may not sound like a lot, but that's roughly comparable to the entire CO2 output of Germany. Since reducing trade isn't a likely option, what about a technological improvement to help reduce the emissions from these well-stocked maritime behemoths?
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
I think at the moment we're in a period of extreme inflation, and we will continue to take some price through the rest of this year. Our plans beyond that are for much more moderated pricing, but I don't think we've seen the end of price increases from us.
Concern is clearly has clearly increased, and that will, of course, reduce confidence. That will lead to at least some time in the coming quarters where we will expect to see lower growth.
We faced expected headwinds related to the continued slowdown in our online e-commerce vertical, which had grown quickly during the COVID-19 pandemic, as well as ongoing targeting and measurement challenges impacting advertising spend. We experienced a further deceleration in growth following the start of the Ukraine war due to the loss of revenue in Russia.
This is Bloomberg Surveillance, Early Edition, with Francine Lacqua.
Well, good morning, everyone, and welcome to Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London, and here's what's coming up on today's program. Friends, with Facebook, Meta shares soar after hours as its social network returns to user growth. Twitter, Amazon, and Apple also report later today. Then, EU gas demands, while Ursula von der Leyen warns companies against paying for Russian gas in rubles. Germany is ready to back a ban on oil gradually from Moscow. Plus, eyes on earnings. Standard Chartered raises its revenue outlook. Unilever hikes prices as cost inflation bites, and Barclays traders post a surprise jump in FIG trading. Now, we have a lot of earnings to get through, so we'll get onto that very shortly, but this is a picture for the market. So we're seeing elevated European stock 600 gaining some 1.1%. Of course, the focus in some of these earnings better than expected. Also, European stocks rallying after we had not only these updated earnings trying to rally, I guess, some of their individual sectors, but we're also getting a bit of a lift from China. The one I would watch out for is yen. You can see dollar yen at 130. 130 is a huge psychological deal. It means, of course, that the divergence play between Japan and the rest of the world will continue. Interesting to hear Governor Kuroda again and again saying he will not lose track of what he's trying to do, not seemingly worried about inflation. That really goes against the grain of every other central bank across the world, almost every other central bank. This is what the picture looks like for some of these European countries. So if we take a look at the individual resolve, for example, of Germany, but also, France and Italy, the main question, like it was yesterday, is what do they do with their dependence on Russia? A lot of these countries asking Brussels and the Commission to come up with a plan. Can they actually trade in rubles? Can they pay for their gas in rubles, or is that really against sanctions? So a bit of a going and throwing between them to see exactly what they can and can't do. We understand through our Bloomberg reporting that 10 European countries have opened accounts in ruble, ready to pay for that if they were allowed to do so. This is a picture for pre-market in Meta. Meta, you know it's Facebook, but I like reminding you because we don't use a Meta platform. For the moment, we only use Facebook and their other platforms, gaining 18.2%. This is giving a nice lift to a lot of tech stocks after we had disappointing figures from Netflix and others the day before. Now, the EU is preparing its response to Russia's threat to cut off further gas supplies to Europe. Ursula von der Leyen warning companies not to bend to Moscow's demands to pay for gas in rubles, as that would be, she says, in breach of sanctions. Well, that's despite a Bloomberg News exclusive suggesting at least 10 European companies have set up ruble accounts. Well, joining us now, our Europe correspondent, Maria Tadeo. Maria, first of all, how do you square the two? There's also a lot of countries asking for a clarification on the Commission of what they can and can't do.
Yeah, the short answer, Francine, right now it's very difficult to square the two, and in many ways you can't. If you look at the words yesterday from Ursula von der Leyen, the head of the Commission, she says, follow our guidance. You only pay in euros, and if you don't, or you facilitate that payment in rubles, you could risk being in breach of European sanctions. And Yet, Francine, we know there's about 10 European companies that have already set up twin accounts, one in euros and a conversion in rubles, so that the gas continues to flow. I think there's two big issues, Francine. One is the legal responsibility for this transaction. Does it end in the moment in which you pay in euros, or do you also hold responsibility over that conversion in rubles? In that case, you can see why there's breach of sanctions. Companies will tell you if Gazprom, however, is not sanctioned, then what is the problem? It is still connected to the SWIFT, and the European Union still uses it to finance those transactions. Yeah. So, Francine, the European lawyers are going to be working overtime with this, and we're about to hear from Ursula von der Leyen in about 2 hours' time. The idea is that she's going to provide some clarity, which at this point is very much needed.
So, Maria, is this power move by Russia taking Europe closer to a full embargo? Where does Germany stand on this exactly?
Yeah, and Francine, you know, there's two big school of thoughts right now. One that says at this point, Russia's using this as a geopolitical weapon. The idea is that maybe it is time for the European Union to front run the Russians and do it first before the Russians cut it off. Others who believe we can still wait for about 3 weeks. Remember, the other big deadline coming up is mid-May, and at that point, perhaps you have 3 weeks to revisit this whole scheme of payments. But Francine, what I can tell you is that this week we are expecting another package of sanctions. It would be the 6th that's been placed on the table. It would include, or could include now, a partial embargo of oil. We're expecting this to be signed off by Saturday. But of course, the big issue here is that it doesn't include gas. And at this point, as you can see very much, this is still a gas story.
It certainly is a gas story. Maria, thanks so much. Maria Tadeo, there, our correspondent in Brussels. Now joining us is Massimo Di Odoardo. He's Vice President of Gas and LNG Research at Wood Mackenzie. Massimo, thank you so much for joining us. I mean, first of all, if there was an oil or gas embargo tomorrow, and again, it's unclear, there's a million discussions on whether they can pay in ruble or not, how much energy does Europe have left?
Well, not much, right? And it's very different between oil and gas, obviously.
Yes.
So for gas, the issue that Europe has is that it cannot substitute all that Russian gas straight away.
Right.
It's as simple as that. For oil, obviously, there are alternatives, and that's because oil can be shipped, and eventually Europe can get gas oil from elsewhere.
So, Massimo, if you're Italy today, if you're Germany today, the countries that are most dependent on Russian gas, what kind of calculations do you do? I mean, the politicians and the companies have a really difficult task to make.
Very difficult task, and you can see how different countries have responded, how difficult that task is, right? So you've heard yesterday OMV, so Austria and Germany, willing to effectively abide to this new payment approach, and Italy on the other side taking its time to see whether there are options. But in reality, right, while again probably Austria and Germany really don't have any other option to substitute that Russian gas, Italy might think it has it, but we don't think actually that that is going to be something that they can do, at least in the short term.
There's nothing, there's not like, is there some kind of agreement with Qatar that they can do and get the gas quickly? Can the US and some gas, are there strategic reserves in gas that they can release?
It takes time. Europe is
How
important.
much time?
Well, Europe's importing as much LNG as it can at the moment, right? Okay. For new supply to get developed, it takes between 4 and 5 years, right? So until 2025, possibly 26, more LNG supply in Europe compared to what we're seeing now, it's very unlikely.
So is there anything that these countries can do in the next 5 to 6 months?
Well, I mean, I'm afraid for some of these countries, if there is an embargo of Russian gas, the only way is to cut demand, right? And different countries would have different exposures. So we've done some analysis at a European level. If Russia was going to cut supply just now, we think that eventually up to 10% of industrial demand could be cut, right?
Yeah.
But the dynamic would be very different across different European markets, right? So Italy and Germany will certainly be the most affected, while on the other side, France and the UK might be less affected. But all of them would see extraordinary high prices, much higher than what we're seeing today.
So Massimo, I've seen a plan actually from Germany and some of the, if you have to ration energy, so they, have gone through sectors and say, right, this sector, for example, this part of the manufacturing, which we could do without, a little bit like what happened in COVID. What would happen in Italy? And actually, do we really, is there a sector that actually needs a lot of gas that we could do without? Or is it, I mean, I know it's not as simple,
yeah.
but...
I mean, there are ceramics and manufacturing that, need quite a lot of gas, for example, and obviously are not essential to living. But nevertheless, that results in quite a lot of suffering in terms of GDP and industrial growth. So while there are ways to manage it, the implications on GDP could be quite dire.
Yeah, and of course, as opposed to COVID, this is something that is self-imposed by some of the governments. So what do you think they'll end up deciding? Will some of these companies, I think one of the Italian companies also set up an account to be able to pay in rubles.
Again, I think what you will see, it's really dependent on how countries and companies can deal without Russian gas. Again, Italy perhaps has a bit more leeway compared to Germany and Austria, at least at the moment. And so you might see some companies try and do something, right? But again, Edison, for example, has a contract that expired at the end of this year. They might decide to give that away. But Eni still imports more than 20 BCM of gas from Russia. We think it's unlikely that they'll be able to do anything but just go with these payments.
So what do you think Germany will do? And Germany, wasn't against it. This is an oil embargo yesterday, but that it has to be very gradual.
Yeah, exactly. I think Germany is perhaps in an even worse position than Italy because again, has less optionality. So, and I think they've signaled that, right? If you hear what they said today, they seem to be keen to abide with this payment. Again, the idea is that this payment, the payment in double euros and rubles, doesn't breach eventually sanctions, and that's what they'll have to do, unfortunately.
Massimo, thank you so much for joining us. Massimo Di Odoardo there, Vice President of Gas and LNG Research at Wood Mackenzie. Now, coming up, friends with Facebook, Meta shares soar after hours as its flagship social network returns to user growth. The revival offers, Wall Street optimism that its earlier decline was a blip. More on that next. This is Bloomberg.
When you think space, you probably think one space agency that travels under the radar is ESA, which is surprising considering what the European Space Agency has achieved and how vital it is to the global space industry.
We've collaborated with pretty much everybody who is involved in space exploration.
ESA wants to be a leading force in furthering humanity's mission into space.
Commander Ground, do you copy? Copy.
If we want to have successful human missions to Mars, we are going to have to learn to live and work off-world in a different way. The place where we are going to learn to do that is on the moon.
Can ESA help humanity take its next giant leap?
Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacroix here in London. Now let's get straight to some earnings news. We have so many earnings today. Meta Platforms reported after the bell, dispelling concern of user saturation on the legacy Facebook platform. Now the results calmed investor nerves following Alphabet's results, which were dragged down by YouTube. Well, Bloomberg's Laura Wright joins us with the very latest. Laura, there's a bright spot. Not everything is dead in tech.
Exactly, a bright spot, a real relief for investors. And we're still seeing Meta Platforms surging in the pre-market, up almost 18%. Well, look, Francine, a lot of the headwinds were already priced in. Competition from TikTok, the platform that the Gen Z kids and Francine Lacroix like to use, the war in Ukraine, those Apple privacy changes that make it harder for advertisers to acquire data. Yes, average revenue per user was low, the lowest since the third quarter of 2020, but Meta Platforms, they're trying to push advertisers toward Reels, their short-form video competitor to TikTok, and millennials are back, an increase of 31 million in the first quarter daily average users, dispelling concerns that the legacy platform is dying. Now, looking forward to the future, Reels will remain in focus, and we heard a lot about that on the earnings call from the CFO, Sheryl Sandberg. She calls it a multi-year journey. The metaverse, how much will it cost? How long will it take? Mark Zuckerberg gave us a little bit of insight. He said it could be 10 years until all that investment turns profitable. The Oculus gaming headset was received well when it was released last year, and this year we'll see the workplace virtual reality headset. So we might be in a very different working environment before we know it, Francine.
Yes, Oculus, although a lot of people get queasy actually looking at Oculus. Maybe, holograms are the way forward. Laura, thank you so much. Laura right there with Facebook and Metaverse's 10-year journey. Now we're joined by Patrick Spencer, he's Vice Chairman of Equities at Baird. Patrick, great to speak to you and great to have you here in the studio. All right, are we going to speak by holograms? Do you like any of the tech stocks, or are they just too expensive right now?
Morning, friends.
Good morning.
It's lovely to be back physically in the building.
It is nice, isn't it?
After being in my office in the country for the last 2 years.
Forget all this Oculus stuff. We want real conversations.
Real conversations. So I think our view is, we've been a little bit cautious on markets this year. We're very selective about technology. It's been beaten up pretty badly. As you know, NASDAQ's down about 12% this month. So we focus on really the areas of technology that excite us. Digitization is basically ain't going away. It's a secular trend. But within that, we like security, we like the Internet of Things, we like artificial intelligence and the cloud. And I think those have been borne out by the recent earnings and where you've seen performance and weakness.
Patrick, what I'm concerned about when I look at digitization is that if you're not in the digital world, you're going to lose now, aren't you? So how do you play digitization? Is it more getting rid of the sectors that are just not keeping up, or the companies that are just a little bit, boomer style?
Yeah, it's a great question because, within that is, you've got a Fed that's actually raising rates at the moment. And, that lovely adage, the first thing I learned when I came into the city 30 years ago is don't fight the Fed. So you've got, basically QE going to QT. So price to sales companies now, which are under pressure, they've actually got to learn how to innovate and basically actually turn themselves into free cash flow machines.
Yeah.
So a lot of the smaller, mid-size growth companies have been crushed. Something like, I think, 40% of the NASDAQ stocks are down 50% this year. So you've got to be selective where you choose that. So ours predominantly are big tech companies within those areas that I talked about.
But Patrick, when did you start? Yeah. Just a couple of years ago, right? I mean, don't fight the Fed. Now it's the Fed saying don't fight the markets because they seem so dependent to how markets react. It's almost like they don't have the guts to go and deal with inflation.
Sure. Well, certainly we see 50 basis point increases next week. We see another 50 basis point actually increases in June. We look for 2 3/4, 3% by year end. So that's aggressive, and that takes you out of neutrality, and that takes you into worries about recession. And that's what I'm saying. Don't fight the Fed. You've got to be very careful of which stocks you buy. And that's why you've seen all this volatility at the moment.
So how much more volatility are you expecting? And that brings you what, about 3.25 by year end?
Yes, we're looking for about 3% by year end. Yes.
You see, I still got it. I can still calculate, just about.
Fantastic. Yeah. So, well, you've seen, this year alone, with QT, I think 75% of the market this year on the trading days have seen more than 1%. Compared to QE, that was completely, actually, it was so, there were the VIX was very, very low. So yes, I think the volatility will increase. That's why you've got to be so careful, because the key, we believe, is peak inflation.
Right.
And at Baird, we believe peak inflation comes in the second half of the year.
Does it?
And
That's bold.
If it is bold, because some of this inflation could be durable.
Yeah.
So if we see peak inflation in the second half of the year, that means we expect maybe lower rates, but better earnings. And therefore, some of these growth stocks, risk on could be interesting.
Okay, Patrick, hold that thought, because I want to talk a lot more about peak inflation in the second half of the year. Pretty optimistic. Patrick Spencer, Vice Chairman of Equities at Baird, stays with us. Coming up, we'll get more on the markets as NASDAQ futures jump, yen drop, shakes up currencies. Well, we'll continue our conversation with Patrick Spencer. This is Bloomberg.
Energy prices and a short supply of key chemicals that produce synthetic fertilisers are sending pig, cow and horse manure prices soaring. Even human waste is in demand as farmers hunt for alternatives. Fertiliser helps increase crop yields.
You can see how much moisture is held into this. It's a lot of organic material into the compost, so it breaks down, the manure and the straw breaks down into a friable mix that can be mixed into your soil in the ground and for growing a whole range of different vegetables. Holds the nutrients in, holds the water in, and it really increases the kind of biodynamic profile of the soil.
The recent price spike could mean more farmers going organic for the long term.
I think that it's hard to put your head around any narrative. Let's just be honest. We've had sort of a shift in, are we in some sort of stagflation fears moment? People were talking about that all day yesterday.
Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Now, upbeat corporate earnings in Europe are bolstering the bull case for the economy and the markets. Despite this, China's COVID outbreak, the war in Ukraine, and recession risks still weigh on investor sentiment. We're back with Patrick Spencer. He's vice chairman of equities at Baird. Patrick, you had this huge, bold call. You're expecting a lot of the inflationary pressures, and I don't know how many, if it comes from energy or elsewhere, to actually slow down in the second half. So if the Fed is too aggressive, if central banks in general are too aggressive, could it lead to a policy reversal and therefore a policy mistake?
Yes, it could, but you've got to bear in mind that the market, basically central bankers follow the markets.
Yeah.
And the markets are telling you, look, you've got mortgages at 5%, which are up from 2%. You've got the 10-year at, you've got the 10-year at, 1 and whatever it is, 170, down from 190. And some of the shorter end of the market. So the market's already telling you that it's going to increase rates. So the market already has been doing its work, and you're beginning to see a slowdown in general economies. And the Fed, it may talk hawkish,
yes,
but I think it will be more dovish.
Right.
You've got you've got 100% deficit to GDP in the US.
Yeah.
And every 1% move in rates costs you something like $240 billion. Yeah. So there's a huge influence, actually, on the government to finance that.
But is that, Patrick, because there's a tightening of financial conditions without the Fed actually having to do much? And again, what does that mean for sectors you want to be invested in the US?
Yes, no, it's a very good question. If you look at the earnings that have just actually been reported, despite all the things we've just been talking about today, 80% of the companies actually have beaten earnings this quarter, or 30% of the S&P have reported, and there's sort of 80%. We as a firm have been quite cautious this year because we were concerned about rising rates and don't fight the Fed. And, we've been more cautious in buying things like utilities, REITs, energy stocks, those types of, staples, defensive names. But we're now beginning to warm a little bit more aggressively to pro-growth. So the technology stocks on a specific basis, some of the discretionary stocks. And the recent earnings have shown that basically, the consumer is still strong.
Yeah, but to what point? So I had a good conversation actually with the Unilever chief executive, and they've managed to increase sales by increasing prices. At some point, when inflation really starts to bite, then they'll just switch brands to cheaper ones.
Yes. No.
And I guess for you, it's catching that falling knife, or
Yes.
not catching that falling knife.
Yeah, no, that's also a very good question. But from the US earnings so far, what we've seen is that premium brands, people who actually are paying up from that. The consumer had $1 trillion of savings prior to COVID. It's now got $3 trillion. There's almost full employment in the US. So the consumer's feeling pretty good. And the recent consumer earnings has actually proved that they continue to spend. So until we go into recession, I think pricing can still be absorbed by the consumers.
Patrick, thank you so much for joining us today. Patrick Spencer, the Vice Chairman of Equities at Baird. Coming up, crypto mining company Argo Blockchain says it's seen a 291% increase in revenue in its full year results. We speak to the chief executive next. We'll also have a full roundup of markets. We look at yuan, we look at yen, and the Bank of Japan. This is Bloomberg.
the Delhi airport, and behind me you can see SpiceJet 737 MAX aircraft. Chairman Ajay Singh earlier today said that Boeing is going to compensate SpiceJet in form of cash and aircraft. There's a big celebration happening at the Gwalior airport. As you can see, they've literally rolled down the red carpet for SpiceJet Chairman Ajay Singh. there are balloons, there are flowers. This is a big deal for SpiceJet because it is the only Indian operator of Boeing 737 MAX planes currently.
A lot's happening on Wall Street.
It's the basic law of economics.
It validated what the market was already pricing.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insights.
David, you just hit the nail right on the head.
From businesses most influential and instrumental.
And that's the way you run good risk management.
It's a challenging dynamic.
We could continue to see that kind of strength.
Bloomberg Wall Street Week premieres Friday with replays all weekend on Bloomberg Television and Radio.
Crypto, you have a world of young people that want their own financial system and their own culture. And it is very powerful, and I'm a big believer in it.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
Well, friends, with Facebook, Meta shares soar after hours as its social network returns to user growth. Twitter, Amazon, and Apple report later today. EU gas demander Ursula von der Leyen warns companies against paying for Russian gas in rubles. Germany is ready to back a ban on oil from Moscow. And eyes on earnings. Standard Chartered raises its revenue outlook. Unilever hikes prices as cost inflation bites. And Barclays traders post a surprise jump in FIG trading. Well, good morning, everyone, and welcome to Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Now, the markets tell us a story that earnings are not as bad as expected. Certainly, we also have a nice lift thanks to what we saw over in Facebook earnings. Now, also the Bank of Japan sparking the sharp slide in the yen by doubling down on its promise to defend a rock-bottom yield target. And that really leaves it as a dovish outlier as other major central banks do it elsewhere. This is a picture for yen, 130.72. And elsewhere, you can see the NASDAQ futures are also gaining some 2.3%. Meta, or Facebook, elevated in pre-market trade. Now, let's get straight to the Bloomberg First Word News. Here's Leanne Gerrans. Hi, Leanne.
Hi, Francine. EU President Ursula von der Leyen has warned companies not to give in to Russia's demand to pay for gas in rubles. European firms have been scrambling to respond after Moscow cut off gas to Poland and Bulgaria. Bloomberg has learned Italian energy giant Eni is preparing to open ruble accounts at Gazprom Bank as it seeks guidance on whether it can actually use them. Now, cities across China are rolling out measures aimed at keeping COVID flare-ups at bay and avoiding the hardships endured by Shanghai. Hangzhou, an e-commerce hub a short train ride away from Shanghai, has started a mass testing drive, joining the capital Beijing and trying to eliminate outbreaks before they do spiral out of control. China is now near the bottom of the latest Bloomberg COVID resilience ranking. The Bank of Japan has sparked a sharp slide in the yen by doubling down on its promise to defend a rock-bottom yield target. The central bank said it would buy an unlimited amount of bonds at fixed rates every business day. That is as the BOJ supports its 0.25% ceiling on government debt yields as part of its stimulus measures. And Bill Wang has pleaded not guilty to fraud and other charges from the collapse of his family office and will be freed on a $100 million bail. The founder of Archegos Capital Management agreed to pay over $5 million in cash and also pledged 2 properties, including his own personal home, to secure his bond. He is facing 11 charges, including racketeering conspiracy, market manipulation, wire fraud, and also securities fraud. Global news 24 hours a day, on air and on Bloomberg QuickTake, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Leanne Gerrans. This is Bloomberg. Francine.
Leanne, thanks so much. Now, the crypto mining company Argo blockchain says it's seen a 291% increase in revenue in its full-year results. Now, that was supported by China's exit from the mining industry, which saw a temporary drop in the computing power required to mine Bitcoin. Argo's focus now turns to significantly expanding its mining capacity in Texas. Well, we're delighted to be joined by the Argo blockchain chief executive. He's Peter Wall. Peter, thank you so much for joining us. Talk to us a little bit about these hash rates, which is basically the cost of powering computers. With energy prices prices up. How much more difficult and how much more expensive is it to mine?
Yeah, it's a good question, Francine. Obviously, you know, to be a miner in the crypto world, in the Bitcoin mining world, you need three things. You need power, you need machines, you need capital. So obviously the effect of energy, the cost of power is going to have a big impact on miners. Fortunately, most miners that are set up in various places around the world are set up in industries or rather in locations where power is cheap, where prices are locked in. So I think in the short term, the cost of energy is not really going to affect miners in a huge way. Right. But I think in the long term, obviously, miners need to always move to where power is really inexpensive. We're setting up in Texas right now. We don't anticipate having, you know, the cost of power having a huge impact on our work there. But obviously, it's something that we watch closely.
But Peter, yeah, and actually, I mean, we've just hired one of the most wonderful reporters on cryptocurrency. She's Emily Nicole, and we were talking about, you know, some of what will happen in Texas. And she was reminding me that basically the number of power required because of all the miners wanting to move to Texas is equivalent twice New York City and how much it powers. So they want to increase by 6 gigawatts the power used to mine. This is for the state of Texas. Overall, about 17 gigawatts would be needed. So again, what does it mean for a company like Argo blockchain?
Well, Texas is interesting. You know, there's 100 gigawatts of power on the particular grid there. It's an energy island. It's not connected to the rest of the national grid. And so there's no shortage of power in Texas. 6 gigawatts, it will not have a big impact overall. In fact, there's more than that that's coming online. There's about 20 gigawatts that's coming online in solar power in Texas just in the next 2 years. So miners can play an important role, particularly in a place like Texas, in a jurisdiction like Texas, where there's a lot of renewable power. Miners can help stabilize the grid, can turn their power off. It's one of the very few large load users that could turn power off and
Peter,
give power back to the grid.
I mean, there was a big storm. You know, I keep on being told that, you know, one of the big questions is what will miners do when demand outstrips supply? But in general, what are you expecting out of U.S. regulation later this year? What does it mean for mining companies and Bitcoin in general, or all cryptocurrencies?
Yeah, so listen, I think, you know, regulation is coming to the world of crypto. We've seen it kind of, you know, coming in stages, and I think it depends on which jurisdiction you're in. Obviously, there's places like China, which have been very heavy-handed on their approach to mining. There's just places like Texas, which have been very open. You know, we mine also in Quebec, where they have very clearly set what the guardrails are for miners, and we work within those guardrails, and that makes sense. And part of that is what we just talked about, curtailment, giving a certain amount of power back to the grid when it's very cold, when power is needed elsewhere. And so I think in the United States, the approach that they're taking is a pro-innovation approach. They've said, listen, we're going to set some guardrails. Those are coming, but we don't want to hold back innovation. And I think that's the right approach.
Peter, as a UK company, is there any appetite to actually support some of the mining over here?
Listen, miners are always going to move to where the power is cheapest. So you've got some places in you know, the northern part of England, in Scotland, where there's low-cost wind power. That's interesting, but it's still going to be more expensive than other parts of the world. So likely it's going to take a few years before we see any mining happening at scale. Texas is such an attractive place right now because of the grid, because of the amount of power that's there. So we're focused on Texas for now. There's other parts of North America where you're seeing lots of growth. Some folks are moving to South America. The European market is there. Some parts of Scandinavia, there's some mining happening. For the most part, most mining growth right now is happening in North America.
Peter, given mines don't really create a lot of jobs, do you have a lot of questions from, you know, politicians or, you know, governors in states where you are? Who's the beneficiary of this? Is it really a worthwhile use of energy?
Well, I think mines do create jobs in rural areas. We're working in Dickens County. You know, there's 3,000 people in that county. We've hired 40 people in that region or from that region. That is a big impact for a community of 3,000 people. So if you go and you speak to the judge in Dickens County, for instance, he's very happy to have us there because there's not a lot of industry that's happening in that particular part of the state. So what we've seen in other parts of the world, like where we're operating in Quebec, we've had a similar experience in a smaller community there. And then in terms of being able to be a stabilizer for the grid, to use some of the power that most of the time is available. I think a lot of large jurisdictions are recognizing that mining can have a lot of benefits for communities large and small.
Peter, also your 2021 revenue jump was, of course, supported by China's exit from the mining industry. What is revenue looking like without that added benefit going forward?
Yeah, I think revenue is strong. I mean, mining margins are still very, very good. We've been putting out our numbers since the China ban. They've continued to be strong. Our mining margin for the first quarter of this year was in the 70s that we've been putting out. So I think it's still a very profitable business. Obviously, 2021 was a remarkable year. You had the China ban, as you mentioned. You had the price of Bitcoin. Network hash rate continues to go up. That's just part of the story with Bitcoin mining. So you need to be in the upper tier of efficiency. You need to be in the right place for power costs. But it's still a very profitable business.
Peter, thank you so much. Peter Wilder, the Chief Executive Officer of Argo Blockchain. Now, coming up, we'll have plenty more on some of these earnings. Thank you. DNB Bank reporting net income for the first quarter that beat the average estimates. We speak to the Chief Executive. She's coming up next, and this is Bloomberg.
Exclusive interviews with the most influential figures in finance. Lloyd Blankfein.
Deflation is a terrible thing. Inflation you could tolerate.
Kathy Wood.
Tesla will be in the pole position to dominate.
Jeremy Grantham.
We've had a very, very abnormal honeymoon Goldilocks period.
First available on the Bloomberg Terminal, then on Bloomberg Television and Bloomberg.com. Front Row, the best seats in the house for business's greatest minds.
Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Now, Norway's DNB has reported net income for the first quarter that beat the average analyst estimates. Surging oil prices, a strengthening Norwegian economy, and a margin uplift from rate hikes are all contributing to improved prospects at the country's largest financial services group, where I'm delighted now to be joined by DNB's Chief Executive, Kirsten Bratten. Thank you so much for joining us today. I have many questions on some of your priorities, which are, Ms. Bratten, of course, trying to give loans to small and medium-sized enterprises. How worried are you that they will be slammed by inflationary pressures, and so that would affect your bottom line?
We find the development and the trend across the corporate sector and also very much in the SME sector to be very strong, and a vast majority of the companies are actually looking to invest and grow and are looking to hire more people. Our portfolio is robust and solid. We do not see any signs of growing prices and inflation as of yet, but there can, of course, be more company-specific situation as we move ahead. I would like to highlight, though, that despite a slight growth in inflation in Norway, it's a very different situation compared to what we see in the US and many European countries. Core inflation in Norway as of March was 2.1%. Also looking forward, we are expecting somewhat higher level, but are still at levels that we can define as comfortable and in line with the long-term targets of the central bank.
So talk to us a little bit also about risk management revenues. They seem to be pretty strong in the quarter. Do they really talk to a shift in that trend because of all the market volatility?
It was a strong quarter in risk management, and we have been well positioned in relation to the volatility and the large volumes that have been traded in the Norwegian kroner, as well as the movement in the interest rates. The revenue from risk management will fluctuate from quarter to quarter. They are at the higher level than we deem to be normalized this quarter, but is positively impacted, and there are more opportunities when there's a high level of volatility in the markets, as we've seen in the past quarter.
But is this a proper shift actually in the operating environment for banks, and will this continue?
I think we have a very limited activity within risk management. We only take positions primarily related to the Norwegian kroner and the Norwegian interest rate, and the trading risk management activity as such is not a large part of our business. So higher volatility tends to lead to more opportunities than a more stable market. We have seen higher volatility, might see that going forward, but we do not see this as a material shift in the business of the group overall.
Talk to me a little bit about the IPO market. So actually you bucked the trend. There was not a decline because of some specific IPO markets that you were involved with. How do you expect that moving forward?
We have seen the IPO market slowing during the quarter, as you hear from all institutions across all markets. Despite that, we had record earnings in our investment banking division because the slowing in the IPO market was more than compensated for by a very high activity in M&A and also some activity in the debt capital market. We do not see any projects yet being cancelled. It's more a fact of projects being postponed well into the future. So depending on the outlook, that will determine if and when this market again will pick up. But in all, I think we benefit from having diversified our investment banking activity across geographies and across products, making it more resilient towards market volatility.
The Norwegian central bank is raising rates like a lot of central banks around the world. That's benefiting banks, I guess, such as yourself. What does it mean for shareholder return this year?
It's very positive for banks in general and us when the rates are increasing. More particularly, I'd highlight that it's important why the central bank is hiking rates. And in Norway, the central bank is hiking rates on the back of a very healthy economic development and a very high level of activity. We have not guided specifically on the impact, but so far we have on 3 occasions raised rates as a consequence of the central bank hiking the key policy rate, and have highlighted that the historical impact of each of these have been an annual impact of between 1.2 to 1.5 billion kroner. We cannot guide to the future, but those are the historic numbers showing the impact.
Well, thank you so much for joining us. Kirsten Bratten there, the Chief Executive Officer of DNB. Now, we'll have plenty more, of course, on some of these bank earnings, but now let's get straight to your Bloomberg Business Flash with Leanne Gerrans. Hi, Leanne.
Hi, Francine, and some more earnings. Facebook's main social network added more users than projected in the first quarter, sending shares soaring after hours. Meta Platforms reported almost 2 billion daily users for its flagship platform, signaling a return to growth after the first ever decline in the December quarter. The social media giant had been losing momentum as a new generation flocks to sites like TikTok. Now, Samsung has reported a a surge in first quarter profit on strong sales of memory chips and premium smartphones. Net income at the South Korea giant increased more than 50% in the period, well ahead of estimates. However, in the earnings call, the company warned about the potential impact of the war in Ukraine, surging inflation and COVID lockdowns in China. And Qualcomm shares have surged in late trading after giving a strong sales forecast for the current quarter. The company is the biggest maker of chips that do run smartphones. Qualcomm's revenue forecast came in ahead of estimates, helping dispel fears that chip demand is slowing after a pandemic-fueled surge. And that's your Bloomberg Business Flash. Francie.
I like that pandemic-fueled surge. Thank you, Leanne, with all the latest business news. Now, coming up, Unilever posts strong first quarter sales growth. We hear from its chief executive next. This is Bloomberg.
Stories about what they call black soot caused by the manufacturing and consumption of these fuel products in the illegal refineries.
Oil theft, known as bunkering, and the refining of its spoils is worsening the damage from decades of fossil fuel exploitation, creating one of the world's most severe ecological disasters.
Our sacred forests, our homes have to give way to oil wells, and no one gets much benefit.
Imagine a resident of Port Harcourt who inhales this soot every second in 24 hours, 7 days a week, 30 days in the month, and for years now, we are dying slowly but surely, and our lifespan is reducing every day.
Daybreak with Lee.
On Bloomberg Radio.
Welcome to Daybreak Australia. This is Bloomberg Technology. This is Bloomberg Green.
On TV, radio, and the web, this is Bloomberg.
Economics, finance, politics. This is Bloomberg Surveillance, early edition of Francine Lacqua here in London. Now, this is what the markets are looking at. A bit of support for earnings, some of them better than expected. We had a good results, for example, from Unilever, where they were able to pass on some of these inflationary pressures. The one thing I would really look into is, of course, what's happening with Japan and what's happening with yen. Look at that, 130 versus $1. This is a huge psychological level. And, of course, it goes to the policies that Governor Kuroda has very well explained. He will not turn and follow all the other central banks in raising rates. Now, Unilever has also reported underlying sales for the first quarter that beat the average analyst estimate. The consumer goods giant warns that raw material inflation will be worse in the second half because of the war in Ukraine, weighing on profitability.
We are seeing inflation across basically all input costs, agricultural commodities, petrochemical derived materials, freight, distribution, energy, labor. And therefore, the majority of the sector's growth and our growth is coming from pricing. At the moment, we're not seeing down trading, but one of Unilever's strengths is we have a portfolio that typically offers a good, better, best alternative in each category. And so we cover that risk a little bit by having offerings at the lower price points for people who are feeling the pinch from inflation these days.
Yeah. Is it changing consumer habits? Do you see any patterns of people buying maybe some of the more expensive, premium, but also much more of the cheaper offerings?
Well, we're very sensitive to the pressure that household budgets are under right now. And you're quite right. We're seeing both things happening. There is up trading going on as people treat themselves to a little luxury when they don't have the ability to invest, for example, in a holiday or a new durable good. But also some down trading. And the down trading that we've seen has been particularly in Latin America and a little bit in Europe. Overall, though, in the world, we're not seeing huge shifts in consumption other than people obviously having to carry the inflationary costs that are being passed through.
So how much more do you think inflation can go up? And again, what does it mean for your input costs?
Yeah. We had guided 1 quarter ago that we saw input costs for the year increasing for Unilever by 3.6 billion euros. We've now upped that estimate to 4.8 billion euros for the year. We're largely covered now on those costs.
So how long do you think you can put prices up for?
Well, I think at the moment we're in a period of extreme inflation, and we will continue to take some price through the rest of this year. Our plans beyond that are for much more moderated pricing, but I don't think we've seen the end of price increases from us or other players in the industry for 2022.
Well, Unilever Chief Executive there, Alan Jope, speaking to me a little bit earlier on, shares currently a touch lower. Let's also look at what we're seeing pre-market for Meta. This is the parent company of Facebook, yesterday coming in with some earnings that were certainly supported after we had a bit of a disaster with some of the other tech companies that made a lot of traders worry about tech valuations. Now, this is today's trading session. The Stocks Europe 600 index rising more than 1%. I'm looking at every industry groups, and for the moment, it's in the green. If you look at the big individual contributors, TotalEnergies, Glencore, but also Capgemini, they all posted gains on pretty good earnings. If you look at what we saw in terms of earnings, almost 70% of companies in Europe are due to publish results today. 61% of the companies so far that have reported have beaten estimates. That's a nice little size and scope figure that we'll delve a little bit deeper into. And then finally, yen sliding to the closely watched level of 130 per dollar, while the U.S. currency, the dollar, extending an advance. Bloomberg Surveillance Early Edition continues in the next hour. Matt Miller and Kay Lyons are in New York. Our Anna Edwards is here in London. And this is a Bloomberg.
Of the year, but Bali is still quiet and empty. I am here in Kuta Legian, one of the main walking streets here that is used to be a tourist spot for beach, dinings, shopping, but many shops here are still closed. Most of the outlets are either for rent or for sale as they have run out of business.
Saya kerjanya di sini udah lama, udah ada 10 tahunan di sini kerja. Masih sepi sih, nggak kayak dulu. Kalau dulu kan rame, sekarang ya ada 1-2 itu ada, tapi nggak kayak dulu. Kalau dulu rame sekali. Sekarang paling dapat jualan ya 100, 120 gitu, 200 ya. Kalau dulu sih ya nyampe dah 1 juta, 1,5 itu nyampe dapat jualan. Bisa sampai 2 juta dulu. Sekarang nggak pernah lagi dapat segitu. Sama aja. Belum ada turis ke Bali. Masih ya domestik aja.
While Bali has reopened its borders for foreign tourists since October, they're still not coming in. Many international airlines are yet to reinstate their direct flight to the island. Balinese people here really hope they can see more people from Australia, China, and Europe to come visit next year.
Mercedes-Benz is on a path towards CO2 neutral mobility. So we have flicked the switch there, and really we're going to step by step electrify everything. And what does that mean? Combustion engines get electrified.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
This is a market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
We actually think that there might not be a technical recession, but there could be negative quarters of growth. Q2 is going to be very weak globally.
This year is a battleground between Fed pivoting a negative and the positive, that continuation of good corporate fundamentals.
I don't think we've seen the end of price increases from us or other players.
The question you should ask yourself is, where can I find safety in the world?
This is Bloomberg Surveillance, Early Edition, with Anna Edwards, Matt Miller, and Kaylee Lines.
It's 10 a.m. in London, 5 a.m. in New York, and 5 p.m. in Hong Kong on this Thursday, April 28th. Our top stories today. The dollar gets another boost as the Bank of Japan doubles down on bond purchases and the yen falls. The BOJ's move sending ripples through the FX world. Shares of Meta platforms are soaring. Facebook's main social network added more users than projected in the first quarter. Up next, Twitter, Amazon, and Apple take the spotlight. And Bill Wang's wild ride through the markets. Prosecutors say the Archegos Capital billionaire had a rapid rise and fall in wealth unlike anything Wall Street has ever seen. Welcome to Bloomberg Surveillance Early Edition. I'm Anna Edwards in London with Kriti Gupta and Kaylee Lines in New York. Matt Miller is off today. And Kaylee, once again, we see the fight back of corporate earnings and pricing power this quarter.
Absolutely, and that is definitely giving a helping hand to the equity market, Anna, although arguably the story in FX really is more exciting. When it comes to Asian equities, though, broadly it was an up day. One of the outperformers actually was Chinese technology stocks after China's State Council pledged to support the growth of internet companies and also give some handouts to poor unemployed people, really trying to shore up the economy as it deals with COVID-0 policy. As a result, the Hang Seng Tech Index was up about 2%, but your other leadership in the equities space was Japan. The Nikkei 225 is up about 1.75%, and of course that has everything to do with the weaker Japanese yen. In fact, the weakest Japanese yen we have seen going all the way back to 2002. We have broke above the 130 level on dollar yen for the first time in 2 decades, and of course that is after the BOJ really doubled down on its dovish stance with the continuation of that unlimited bond buying program. So that is weighing on the yen, and in result of that, it is also weighing on the Chinese yuan, weaker against the dollar by about about 0.9%. 664.48 is where we trade, Creedy. So really, it's the ripples across the FX market that have our attention this morning.
Yeah, and a ripple from the Asian market to the U.S. session as well. That risk-on sentiment that you just highlighted, Kaylee, it is showing up in futures trading. The S&P 500 futures up 1.8%, a very strong bounce back. Remember, we have seen an almost 3% sell-off on Tuesday. So to see this kind of reversal, largely technical, but still largely driven also by those haven flows. And of course, what we're seeing with Meta earnings largely driving the flows into the United States. The 10-year yield, not a ton of movement, but Kaylee, I think you're 100% right in terms of the FX movements. It's all about the stronger dollar hitting a 20-year high. A lot of it driven by what's going on in the Japanese yen, that weakness that has persisted, and weakness in the euro, the pound as well. The question here is, what does that do to those interest rate differentials? What does that do to the export picture, Anna? And of course, we can't forget Bitcoin as well, up 1.5%, but put that in the context of volatility. Not a huge move yet, and of course, we're going to keep an eye on that for any more volatility. Anna.
Yeah, movement in FX markets, certainly a feature of the European session. More on that in a moment. Let's have a look at where we are on the European equity markets. And this is what I meant by the fight back for equity reporting and the corporate earnings story that we've seen this quarter, because we certainly saw banking names and also names within the car sector producing good earnings today. And all of that lifting sentiment across European equities, it would seem, in particular in those areas that were flashing bright green in France and in Germany. This is the FX move of interest here in Europe, because of course the yen dominating things through the Asia session, but really interesting to watch what's going on in Sweden. Just a few months ago, we heard from the Riksbank that there would not be a rate hike in Sweden until 2024. Things have moved very quickly on the inflation front, and we got a rate hike today and a signal of more rate hikes to come. Hence the big move that we're seeing in euro Swedish krona as the Swedish krona gains. This is the corporate earnings story at Barclays. Better than anticipated numbers coming through in the investment banking side, and also some market share gains on prime brokerage, helping to distract from the overissuance of exchange traded notes, which had been such a theme and such a worry going into this particular earnings report from this business. Volvo Cars also pleasing with its quarterly earnings, and also the comments that it's given around pricing power and the normalization it expects to see in supply chains, to some extent anyway, in the second half of the year. Albioma, this is a French business that operates in the solar and biomass space, really, of course, at the center of the transition within the energy sector. It's received a bid from KKR, and as a result, a little bit of M&A to sprinkle across that sector. Also, technology getting a bit of an M&A boost here in Europe as well as the read across from those Meta numbers. On to Russia and Russian assets. We'll talk more about the gas conversation as we go through the program, but Kaylee, that really is the focus for the ruble right now. Russia still wants payments in rubles, and it seems to all come down to, when do you judge your payment to have been made? Is it when those euros get to Gazprom Bank, or is it when they turn into rubles at the other end? A lot to talk about on that front, something we'll pick up a couple of times during this program.
Yeah, we're all still seeking clarity on what exactly those rules are, Anna, and we'll continue to look for updates on that throughout the day today. As for what else we'll be watching in the day ahead, U.S. Secretary of State Antony Blinken will be testifying to the House Foreign Affairs Committee on priorities and the budget. Then we'll get some economic data. U.S. GDP is due at 8:30 a.m. New York time. I know Creedy's watching that one. And of course, we all will be watching mega cap tech earnings that continue after the bell. The spotlight today on Amazon, Apple, and Twitter, Anna.
Absolutely. A tech focus continues then for us. Let's get back to the macro, though, because as you rightly say, Kaylee, this was a really fascinating story through the Asia session and continues to have an effect now. Onto the dollar, getting a fresh boost from a dovish Bank of Japan today. The yen tanked beyond 130 for the first time since 2002. Let's get more with Bloomberg's Christine Aquino, who joins me on set here in London. And Christine, incredible moves in dollar yen, and it really hasn't stopped, down by 1.9% for the Japanese currency.
Absolutely, Anna, and that is very much a factor of what we saw from the Bank of Japan today, doubling down on that dovish policy and really putting them at the opposite end of the spectrum as the Fed. Here we have two central banks are kind of doing opposite things. The Bank of Japan, on the one hand, really saying that they're going to keep supporting the market, they're going to keep doing their bond buying process, and the Fed, on the other hand, expected to raise by 50 basis points next week. And so we'll see if they deliver, but certainly that's really doing a number on dollar yen. That's where we're seeing this differential between the two currencies really powering higher today. Also in the bond market playing out as well, that differential between the 10-year Japan and Treasury yield also widening along with the currency cross.
Certainly something we're going to be keeping our eye on throughout the session. Bloomberg's Christine Aquino, thank you so much. Let's switch over to the tech space. Facebook's main social network added more users than projected in the first quarter. This helped to dampen concerns the company is losing ground to apps like TikTok. CEO Mark Zuckerberg spoke on the company's earnings call yesterday.
I
think that the cycle here between investment and meaningful enough revenue growth to be near or very profitable is going to be long. I think it's going to be longer for Reality Labs than for a lot of the traditional software that we've built.
And on that subject, let's get more with Bloomberg's Laura Wright. Laura.
Millennials are fighting back, Critty. Facebook, the legacy platform, is not dead and buried. In fact, an increase 31 million users, daily average users for the first quarter, dispelling concerns of declining user growth that we saw last quarter. Now, a lot of the headwinds were already priced in, the war in Ukraine, those Apple privacy changes, competition from TikTok. Executives at Meta, they want to push advertisers toward Reels, their short-form video competitor to TikTok. Right now, about 20% of time spent on Instagram is through Reels. As we just heard from Mark Zuckerberg, it could take, he outlined on the earnings call, 10 years until the metaverse becomes profitable. We know that Matt Miller has been absolutely smashing his Oculus gaming headset, and this year a new workplace headset is going to be released. Zuckerberg informing us it may actually replace traditional desktop computers in his view. Now, the end is nigh for Twitter. We'll learn about the health of the platform that Elon Musk is inheriting. But what analysts are looking at now is whether advertisers will stick around if the platform becomes this bastion of free speech that Elon Musk wants to see. Will advertisers find that unpalatable? If so, that will offer a tailwind to platforms like Snapchat and Meta platforms. And after the bell, we'll get results from the world's most valuable company, Apple, as well as Amazon. Now, for Apple, this is set to be a record non-holiday quarter. Focus is going to be on those iPhone sales, pent-up demand, the new SE, the iPhone 13. Can that mitigate rolling lockdowns in China, geopolitical issues here in Europe? For Amazon, the legacy business is facing issues, supply chain congestion, higher prices, but the new jewel in the crown for Amazon, it's the cloud business. Amazon Web Services revenue expected to increase 35% year over year. Remember, Amazon Web Services, the market leader in the cloud infrastructure space.
Yeah, and that part of the business is so well for Microsoft, so attention there. Laura, thank you very much. Plenty of tech themes to keep an eye on with Bloomberg's Laura Wright. Now, the EU is preparing its response to Russia's threat to cut off further gas supplies to Europe. European Commission President Ursula von der Leyen warned companies not to bend to Moscow's demands to pay for gas in rubles, as that would, in the view of the Commission, be a breach of sanctions. That's despite a Bloomberg News exclusive suggesting at least 10 European companies have set up ruble accounts. Let's get more details with Maria Tadeo, our Europe correspondent, who joins us now from Brussels. Maria, how do you square the stance of these two different views about what would or would not break sanctions, and how on earth Europe pays for gas?
Well, Anna, at this point, you can't, and that is the issue here. If you look at what the Commission said yesterday, and that is Ursula von der Leyen, who is about to speak in about an hour's time, she said, every company in Europe should follow our guidance. You should not pay in rubles, stick to euros or dollars. That is 97% of contracts are signed in a hard currency. Do not flip it, do not change it, as you risk being in breach of sanctions. But of course, there is a gray area here around Gazprom. This is a bank that has not been sanctioned by the European Union. It is still connected to the SWIFT payment system, and a lot of these transactions would be handled through their unit in Switzerland. Now, the issue here, and going back to this gray area I mentioned, is that Gazprom would set up two accounts. So one, of course, you deposit your money in euros, and then the other one would do the conversion into rubles. But it is very clear that Russia's looking to sidestep the sanctions on the central bank. It is looking to prop up its reserves and, of course, prop up the ruble. The question is, at one point, are you legally responsible for this conversion or not? We know that up to 10 companies have already set up twin accounts, and the question is, do they risk being in breach of sanctions or not? We're waiting to hear from Ursula von der Leyen, as I said, in about 45 minutes, and hoping to get some clarity. For the time being right now in Europe, there isn't, and you can bet that lawyers are working overtime because the risk of sanctions, of course, is very big.
I am sure a lot of hours are getting billed on this. Thank you so much to Bloomberg's Maria Tadeo in Brussels for us. Meanwhile, President Biden here in the U.S. plans to deliver remarks today on support for Ukraine. That comes as his administration looks to send Congress a proposal for weapons and humanitarian aid for Ukraine that would last through September. Jack Fitzpatrick, Bloomberg government reporter, joins us now from D.C. Jack, what can we expect the president to say later on?
Well, it looks like this will be a bit of a preview of the more detailed request for funding that he's going to send soon to Congress. There's a lot of interest in both parties in that funding request. Members expect good bipartisan support for a significant amount of money for Ukraine. And while we're waiting on the exact details, we did get a bit of a preview from the Secretary of State yesterday when Antony Blinken was talking to lawmakers about the needs. In addition to the sort of basic military and economic needs, he did say he expects global food aid to be addressed. Demining is an issue they need to address in this bill because of Russian use of landmines. This is a bit of a staged issue and not an immediate return, but the idea of getting U.S. diplomats back and eventually reopening the U.S. embassy in Kiev is something that could be addressed, at least in initial stage. So there's an expectation among Democrats and Republicans that this funding bill could get strong support. Probably two possible challenges. One, the House is about to leave for a week-long recess. It's going to have to be a couple weeks before they can actually process this and get it through. Two, there's a possibility the Democrats may want to combine this with COVID aid, domestic and internationally, that has gotten caught up in the Title 42 immigration debate. If this all gets melded together, it could get a lot more complicated. But there is a clear expectation among Democrats and Republicans that a Ukraine funding bill that the president is expected to speak about would get bipartisan support on Capitol Hill.
Jack Fitzpatrick of Bloomberg Government tracking those moves for us in Washington. And from D.C., we come right back here to New York. One of the biggest stories on Wall Street, billionaire Bill Hwang's Argo's catastrophe was wilder than anyone knew. Now he's fighting charges that could lead to 380 years in prison. Bloomberg's Danny Berger has more on what we know and what's next. Danny?
Well, yes, it certainly has been wild, Critty. 11 charges being leveraged against Bill Hwang. Now, he has been let out on bail, as has his CFO, who is also being charged. But essentially what prosecutors are alleging here is that, one, Bill Hwang built up these huge leveraged positions with money borrowed from banks, and two, money used on swap returns, which essentially also puts on leverage on this trade and does so in a way that it's hidden from the market. Now, next, they also pumped up the prices by all this buying in a manipulative way, and finally alleged that he lied to banks in order to secure more loans, again, to do this leverage type of buying. Now, to be clear, Bill Hwang, through his lawyer, denies any of this, essentially saying that he is not guilty of any wrongdoing, being alleged entirely innocent, I should say, of any wrongdoing. But the thing here that's going to be very complicated for prosecutors to prove is something that Matt Levine, who wrote our big take, lays out very well, is this idea that it's really, really hard to prove intent. And they have to prove intent here because it's not illegal just to buy a lot of stock, which in turn pushes up prices. I mean, Elon Musk just the other day bought a lot of stock in Twitter, which rose prices there. So it needs to be intent, and short of Bill Hwang sending out a text saying, LOL, I manipulated the stock, it's going to be really tough for prosecutors, Kaylee.
Indeed, Danny. I have a feeling this saga is going to last for some time yet. Thank you so much to Bloomberg's Danny Berger. And of course, as Danny mentioned, you can read today's big take on Bill Hwang at NI Big Take Go on your Bloomberg terminal. Now let's take a look at some stocks moving in pre-market trading here in the U.S. because, of course, there are a lot of earnings movers out there, including Qualcomm, one of the big outperformers in early trading. It's up about 8% after delivering really strong guidance. Of course, it is the biggest maker of chips for smartphones, so that strong forecast kind of soothes any fears about waning demand for chips in particular. Another upside mover on the back of earnings would be PayPal. Yes, it actually cut its sales growth guidance, but maybe not as bad as investors and analysts feared that it would be, and the company's pledge to really cut costs to shore up profit seems to be giving a nice sentiment lift this morning, up about 3.4% before the bell. But absolutely plunging this morning would be Teladoc. This is, of course, an online healthcare company, helps with remote doctor's visits, things like that. It cut its forecast for the top and bottom line. At least one analyst downgraded a number of analyst price targets after that. That stock sinking more than 40% before the bell, Anna.
That is a big drop. Coming up on today's program then, Katie, perfect day to talk to Jane Foley, head of FX strategy at Rabobank, as we watch the yen fall further and further against the US dollar. 130.90 is where we trade now. And later today on Ukraine, we'll hear from the mayor of Kiev. That is at 8:45 a.m. New York time, 1:45 p.m. in London. Vitaly Klitschko joins the team. This is Bloomberg.
companies now, they're getting hundreds, maybe even thousands of applications. So software has come in to automate the process.
You want to write your resume for robots, not for humans. The only job your resume has is to be comprehensible to the software that is reading it, because that software or robot is going to decide whether or not a human ever gets their eyes on it.
These things are programmed by a certain segment of the population that might not be totally inclusive or not be fully aware.
Concerns about how this technology could exacerbate discrimination. For the FTC, I think foremost, the FTC needs to be making sure that we're fully understanding this technology.
We don't trust companies to self-regulate when it comes to pollution. We don't trust them to self-regulate when it comes to workplace comp. Why on earth would we trust them to self-regulate AI?
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
Earnings season is here.
A moment of multiple crises.
Bloomberg is fastest with the numbers and analysis.
You do have some good news and bad news.
It's a good time to own volatility.
Bloomberg, the fastest numbers and analysis you trust.
This is Bloomberg Surveillance Early Edition. I'm Kriti Gupta with Kaylee Lyons in New York and Anna Edwards in London. Matt Miller is off today. One of the biggest stories this morning on the macro front is going to be all the moves you're seeing in the currency space. Weakness in the euro, weakness in the yuan, weakness in the pound, and even the Japanese yen. And all of it seems to be a function of this dollar strength. Look at this. The dollar, for our radio audience, don't worry, I will explain it. The strongest in going back to 20 years, bouncing up against this level you saw in March of 2020, really when the onslaught of the pandemic kind of roiled global markets. And then it goes back to 2016, really coming off of that trade war move as well. So really, when we're talking about that stronger dollar, what are the implications here? Is this simply a question of interest rate differentials, a hawkish Federal Reserve? Is this perhaps a haven bid? What are the implications and the read-through to the exports picture and the commodities picture when a lot of this commodity demand actually has to kind of be dealt with in terms of priced in dollars? Let's pose that question to Eddie Vanderwalt of the Bloomberg Markets Live team. Eddie, something that is so striking to me is that you have this global demand for commodities. Everyone wants oil. Everyone wants food. Those contracts are priced in dollars. And when you have weaker purchasing power from a lot of these commodity importers, that doesn't exactly bode well for a lot of these companies. Your take?
Kriti, absolutely. I think you've hit on all the important talking points there. I think, there is just no bad news for the dollar in these markets at the moment, whether you're looking at the inflation story and rate differentials and the more hawkish Fed, or whether you are looking at, the haven bid with people worried about where they're going to take their money with it, and, you just end up in the US dollar. I think there just doesn't seem to be any bad news for the dollar. And the interesting question, the upshot of all of that is the commodities one that you mentioned, because it's not just commodities, of course, that Americans buy, and they buy a lot of things, and if they buy them in dollars and they get imported, then that has puts a downward pressure on inflation, right? So I'm starting to wonder whether this stronger dollar is going to take just the wind a little bit out of that inflation story that's been dominating markets for so long.
Okay, stronger dollar, weaker yen, one of the big themes of the morning, of course. Eddie Vanderwalt of the Bloomberg Markets Live team, thank you for joining us. MLIV Go, that is the function to use on your Bloomberg. If you want to get further details of the Markets Live blog, visit that function. This is Bloomberg.
city of Jamnagar is a money-making machine for Asia's richest man, Mukesh Ambani. His company Reliance has the world's biggest oil refinery complex here in the city. Jamnagar is also where Ambani is making his newest bet, a $10 billion investment in green energy. His ambition is closely aligned with the Indian government's plan to reach net zero emissions by 2070. But Ambani is not alone. India's second richest man, Gautam Adani, has committed $20 billion of investment over the next decade. But India's massive dependencies on fossil fuels have some environmental advocates questioning the realism and sincerity of those green ambitions and those of its two biggest billionaires.
BSO Now is your online home for weekly Boston Symphony Orchestra and Boston Pops performances. See new concerts that go behind the scenes, plus acclaimed archival concerts. Visit bso.org/now, where the music plays on. BSO season sponsor, Bank of America.
I think that it's hard to put your head around any narrative. Let's just be honest. We've had sort of a shift in, are we in some sort of stagflation fears moment? People were talking about that all day yesterday.
Now, keeping you up to date with news from around the world, here's the first word. Bloomberg has learned that the U.S. has lifted some restrictions on sharing intelligence with Ukraine. It's intended to help Ukraine defend and potentially retake territory in the east and south, where Russia has renewed an offensive. The top Republicans on the House and Senate Intelligence Committees had urged the restrictions be lifted. Cities across China are rolling out swift measures from mass testing drives to lockdowns for just a mere handful of coronavirus cases. They're trying to keep flare-ups at bay and avoid the hardships endured by Shanghai. The responses reflect the growing stakes local governments face in wrestling with the highly infectious Omicron strain. And UBS has become the third major bank to lose the head of its China operations this month. David Chin is stepping down at the Swiss bank. He'll be succeeded by the chairman of UBS Securities, Eugene Qian. The heads of the China units at JP Morgan and Credit Suisse also have quit in April. Coming up, we'll talk more about China and the weakness of the yuan, the weakness of the yen, the weakness of pretty much everything against the U.S. dollar, which is at a 20-year high. How much stronger can it get? We'll ask Jane Foley, Rabobank head of FX strategy, next. This is Bloomberg.
estudio, en nuestro experimento, no hemos pintado todos los edificios de blanco, sino estos más asequibles de pintar. Y ya hemos detectado reducciones medias en el área metropolitana de 0,8 grados aproximadamente en un periodo de ola de calor y con picos máximos de 4 grados de disminución en un momento puntual del día, en una zona puntual del día. Y como dices, en una ciudad como Barcelona funciona incluso mejor que las zonas verdes. Según las modificaciones, nos detectan incrementos, o sea, disminuciones de temperaturas mayores con tejados blancos que con incrementos de zonas verdes como tienen planteados el plan director urbanístico.
Stocked early enough all these precious materials you were just mentioning, and we were on the lucky side that our prognosis was spot on in a way, forecasting what kind of material we would need and what quantity we would need.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
This is Bloomberg Surveillance Early Edition. Here's what you need to know. The Bank of Japan has sparked a sharp slide in the yen by doubling down on bond purchases. The central bank said it would buy an unlimited amount of bonds at fixed rates every business day. That prompted the yen to hit a 2-decade low against the US dollar. Shares of Facebook parent Meta Platforms are soaring. Facebook's main social network added more users than projected in the first quarter. That potentially should stave off concerns that the company is losing momentum as a new generation flocks to younger sites like TikTok. And in New York, the billionaire behind the collapse of Archegos Capital, Bill Hwang, has been released on a $100 million bond. Hwang and his former CFO, Patrick Halligan, have both been charged with fraud. Prosecutors say they schemed to mislead banks and manipulate markets. Both men have pleaded not guilty. I'm Anna Edwards in London with Kriti Gupta and Kaylee Lyons in New York. Matt Miller is off today. And a lot of the focus today is on FX markets then, Kriti, as we make our way through what is generally a fairly risk-on session here in Europe, thanks to, well, in part to earnings.
Yeah, and a lot of that is really seeping into the pre-market trade here in the United States. Futures are actually higher. A big part of this, to your point, Anna, is going to be a lot of the FX trade. 1.7% higher in futures. 10-year yields actually not really moving a ton in terms of the volatility we've seen in the last couple of days. But it is that dollar strength that we're really talking about, rising to a 20-year high. The implications for that are crucial. How much of the fund flows coming in to the stock market in the U.S. is really a function of entering the American market and therefore pushing that dollar strength. The other one you really want to keep an eye on, is speaking of all these currency moves, is Bitcoin. If you see that dollar strength, does that also mean you see more strength into Bitcoin? And right now, the answer is yes, up 1.6%, Kaylee.
All right. We do also want to mention some breaking news, Kriti, coming from the Japan Ministry of Finance. An official speaking in Tokyo saying they will respond appropriately on FX if needed. So you are actually seeing dollar yen coming off the highs of the session, though still we remain above 130. So are we now talking potentially about FX intervention? We'll continue to stay on top of that story. As for the earnings story here in the U.S., of course, we are really in the focus of tech earnings. Meta reporting after the bell, much better than expected when it comes to users, allaying some of the fears around the Facebook story after, of course, the prior quarter it had lost users for the first time ever. Meta is up about 17% before the bell. You also had strong numbers out of another social media company, that would be Pinterest. It's higher by about 6%, and you're seeing a positive read through to other peers in the space, including Snap, the parent company of Snapchat, up about 5%. Twitter, no real movement yet before the bell, Anna, but of course this is one we will watch after the bell when it reports earnings. How much do earnings really matter when Elon Musk is taking the company private anyway at $54.20 a share? Still, though, it's trading below that deal price, $48.64, where it is this morning, Anna.
Yeah, I guess he'll care, won't he, what he's buying. He'll get some further detail on that. I'm sure he's seen the numbers. Kaylee, let's have a look at where we are on the European session then. This is the picture for European equity markets, up by 1.1% this morning on the Stocks Europe 600. And it is that earnings story, partly the technology story from the US, but also the sort of homegrown European earnings story that is helping to lift things. We see strength coming through in technology. There's some M&A in there. We also see strength from the earnings in autos and in the banking sector, crucially. More on that in a moment. We see strength in the Swedish krona this morning as well, because the Riksbank has really surprised the markets, jumping into the fray with the other central banks that are hiking. Certainly in many Western markets, we're seeing that. Put aside what we're seeing in China, what we're seeing in Japan, it is a bit of a global theme, the hiking from central banks. And we've seen that now from the Riksbank, despite the fact they said just a few months ago that they wouldn't be hiking until 2024. So a real catching up to be done there on the inflation story in Sweden. Barclays up by more than 3%. It seems that the trading business doing pretty well, also making some market share gains. That's helping to offset concern around what exactly happened with those exchange-traded notes that the SEC is looking into. Volvo Cars up by more than 7%. Again, beating the market on the numbers they delivered, speaking positively about their ability to price to take into account those higher costs, and also talking about supply chain issues that could look a little easier in the second half of the year. On to Russian assets, and a lot of the focus is on the ruble. The Russians still want gas to be paid for in rubles, of course, and we're all looking for clarity about what exactly this means for those European businesses that want to buy the gas. It's still legal to buy the gas from Russia. That is not against sanctions, but exactly how that is done seems to be a real sticking point and a point of confusion, Kaylee, at this point.
Anna, yes, indeed. Meantime, we also want to get back to that breaking news out of Japan. A Ministry of Finance official speaking in Tokyo says that they will respond appropriately on FX if needed, saying that the recent FX moves warrant extreme concern. This is, of course, after we saw dollar-yen crossing above 130 for the first time since 2002. So are we now potentially talking about intervention in the yen for the first time since 1998? Really, really interesting to see these remarks out of the Ministry of Finance of Japan. Let's get more on this story now with the perfect guest for it, Jane Foley, head of FX strategy at Rabobank, who joins us now. If Japan does not outright intervene, how much weaker could the yen get, Jane?
Well, you know, I think the story there is very much dependent on what happens to US yields, because that's been the big driver between dollar yen. We've seen, of course, the Bank of Japan with its yield curve control policy holding down their 10-year yields on JGBs, whilst US yields, of course, pushed higher in response to the hawkishness from the Fed. So at the story, the answer to your question really much lies with those US yields. If US yields push higher, then dollar yen could push higher. But, of course, if we move into the end of the year, if people are beginning to think, well, you know, the US economy could slow, if yields begin to turn lower, in a way, that could take the Bank of Japan sort of off the hook, if you like.
Do you think we're seeing intervention by Ministry of Finance officials here, Jane, in the market today? And just to recap the headlines that Kaylee's been talking about, the Japanese Ministry of Finance officials saying they will respond appropriately on FX if needed, and recent FX moves warrant extreme concern. Because when we listened to Governor Kuroda speaking earlier on in the Asia session, early in the European trading hours, he didn't seem too concerned about what was going on in FX markets, and certainly seemed to be doubling down on the yield strategy to the expense of the yen.
Well, that's exactly right, and that's what quantitative easing, yield curve control particularly, that's what it is doing. It is pressing down on the yen because of those yield differentials. And that's why, in a certain degree, it would always be nonsense if the Ministry of Finance, who is in charge of yen policy, if they were to order the Bank of Japan to intervene, because then the Bank of Japan, on one hand, would be intervening to support the yen, but carrying through with this yield curve control policy, which, because of the yield differentials, is weakening the yen. So that, in a way, makes intervention, or the concept intervention at this particular point in time, a little bit of a nonsense. And that's why the market is expecting that if the pain of yen weakness is too much for the Japanese economy, and that's because, of course, those input costs, those commodity prices that are used so much in Japanese manufacturing, if that becomes too much to bear, it's probably some sort of change in the yield curve control policy, which is probably going to be the number one thing that the Bank of Japan would do to try and push away from yen weakness.
Jane, the 1998 intervention on the Japanese yen with the dollar required collaboration from American authorities as well. Can we expect to hear anything from the Federal Reserve, from the U.S. Treasury, in terms of the dollar strength that we're seeing today?
Well, Well, that's a very interesting question. But of course, you've got to remember the inflationary environment that we were in just not long ago, a few years ago, for a long time. We were all in a low inflationary environment. And the talk was about the chase to the bottom, that everyone wanted a weak exchange rate because of the low inflationary environment. Now, of course, the boot is on the other foot. We've got inflation, not necessarily in Japan, where underlying CPI is still very weak. But in most countries, we've got high inflation. And that suggests that countries would prefer a stronger exchange rate. And if you look at the policies that the Fed is following, the aggressive nature of the Fed's rhetoric, it's unlikely that in this environment that the Fed is going to push away from a stronger dollar just yet. If, however, we do start to think about a weaker US economy, that's when that conversation could become a little bit more relevant.
Jane, the dollar is stronger not just against the yen, but also against the pound, against the euro. We saw a break of 105 on euro dollar earlier. Where do you put the odds of us reaching parity?
I still, in a way, hope that we don't see parity on euro dollar, because I think if we reach parity, we are seeing some horrible news, really, in terms of the Eurozone economy. And of course, we've had a taste of that horrible news this week, that the market is, I think, much more seriously coming to terms with the energy security threat, particularly for Germany. And whilst it's Poland, for instance, that's been in the headlines this week, Poland is making signs to say it can cope with this cut-off with supply from Russia. But Germany, however, this is a huge industrial nation. If Germany were to go into recession, which it probably would if Russian energy supply was cut, well, that would take the whole region into recession and have global consequences. So this is a much bigger story. It's been around for a while, this sort of story, but I think this week, this is really coming home to bear. And I think if that news about a German cut-off in energy does come to fruition, that's the sort of news flow that could take us to parity. But for now, most forecasts are still thinking that we're going to see growth in Germany, growth in the Eurozone, that the ECB can still hike interest rates. And if that's a scenario that does pan out, I think parity can be avoided.
Okay, we'll focus on the gas story then for links with FX. Jane, just briefly, the Swedish krona, the Riksbank hiking just a month or so after they said that they weren't going to hike until 2024. Are there other banks central banks around the world that you think are also going to be wrong-footed by the pace and the strength of their own inflation?
Well, if we look at the G10, I mean, the Riksbank had been an outlier. Until recently, we did have some hawkish comments a few weeks ago, and the market was anticipating that they would hike in June. But we have, on the G10, turned hawkish for almost everybody now, with the exception, of course, of Switzerland and Japan. And I think they're going to be just a little bit longer. They've had entrenched low inflation really for decades, and it's going to take a lot more to move that.
Jane, thanks so much. Thanks for joining us. Jane Foley of Rabobank, the perfect voice to have on a day when FX markets are to the fore. Also to the fore, tech earnings. More on tech earnings coming up. We've had a number of results already coming through. We've got many more still to come. We'll speak with Adam Crisafulli, analyst at Vital Knowledge Media. This is Bloomberg.
Lots happening on Wall Street.
It's the basic law of economics.
It validated what the market was already pricing.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insights.
David, you just hit the nail right on the head.
From businesses most influential and instrumental.
And that's the way you run good risk management.
It's a challenging dynamic.
We could continue to see that kind of strength.
Bloomberg Wall Street Week premieres Friday with replays all weekend on Bloomberg Television and Radio.
This is Bloomberg Surveillance Early Edition. I'm Anna Edwards in London with Kriti Gupta and Kaylee Lyons in New York. Matt Miller is off today. We focus on technology then. Facebook's main social network added more users than projected in the first quarter. This helped to dampen concerns that the platform has been losing ground to apps like TikTok. Twitter, Amazon and Apple all report later today. Adam Crisafulli is the analyst at Vital Knowledge Media for the sector and joins us now. Adam, good to speak to you. Should a stock the size and age of Meta Platforms, I know it changed its name, but Facebook, Meta Platforms, should it move by 18% on earnings? Is there something we don't understand about the way that these tech names move, for moves of that size to be so normal?
Hi, thanks for having me on. It certainly is a very breathtaking rally last night and then this morning. I think it's more a function of how sentiment had been totally decimated for U.S. tech stocks late last week, Thursday, Friday, and then on Tuesday of this week. You had just an absolute, complete flush of very aggressive selling pressure. That created an extremely low bar for earnings. Not only Meta last night, but also Pinterest and then PayPal as well are also higher on results that if you saw them a couple weeks ago, you probably wouldn't have been all that impressed. But I think, like you said, the user numbers coming in ahead of expectations, that removed a huge concern from the Q4 report where there was anxiety that people were going to exit the platform. And then they also lost less money in the metaverse business than people were fearing. And they spent a lot of time on the call just explaining how they were going to be driving overall profitability of the company. They don't just plan on spending recklessly for the metaverse. So those two items, coupled with a very, very low bar and extremely negative sentiment, are helping to create this very healthy rally this morning in that stock.
Well, of course, sentiment hasn't just been negative for Meta, Adam. It's really been negative for big tech in general. How low is the bar for other giants that will be reporting after the bell today, the likes of Amazon, which is down 17% year to date?
Certainly. I think there's a lot of anxiety around Amazon, but I think people are also wondering now, on the fundamental front, people are very anxious, but just from a technical perspective, if Facebook can see this type of a rally off that type of a print, which, like I said, on an absolute basis was okay, but certainly was not perfect, then I think bears on Amazon are going to be a little bit nervous into the report tonight. There is a lot of concern around the retail part of the business. If you go back to the UPS report earlier in the week, they talked about a drop-off in retail deliveries towards the end of the quarter. There's some concern that as consumer behavior shifts towards experiential purchases, that will also weigh on the purchase of hard goods off of the Amazon retail website. So I definitely think there is a lot of anxiety around Amazon's report tonight, but Facebook has to be is certainly causing people to rethink how the stock will react.
Adam, you mentioned the words consumer behavior. To what extent is Meta, formerly known as Facebook, still that beacon of what the consumer will do and is thinking?
It's interesting. You're seeing a lot of real secular shifts occurring in tech. So, Facebook, is losing share really for the first time in its modern history with TikTok. And then as they respond to TikTok, they're also hurting the monetization of their advertisements. So it's hard to tell if this is really a reversal for the consumer overall. If you listen to Visa or you listen to Discover Financial last night, both of them suggest that they're not seeing any change in overall consumer spending, and the consumer is still very healthy, but they are changing where they're spending money. So like I said, travel leisure indications throughout this entire earnings season have been very, very bullish. Google on its call talked about how search activity for travel leisure is extremely strong. Airlines have been talking about record revenue numbers. So the consumer is shifting towards these experiential types of purchases. And that is certainly going to show up in some of these tech company results, like Amazon, which obviously sells hard goods. They could be vulnerable.
Right, and thinking of companies that sell hard goods, what about Apple? Are there havens left in tech? And if there are, is that one of them?
Yeah, I certainly think Apple is probably the biggest haven among the large caps in tech. Microsoft was another one, so Microsoft delivered. We'll have to see for Apple tonight. I think Apple, they didn't see the type of enormous run-up in growth during the pandemic that other tech companies saw. So they don't have this big hangover effect as the pandemic fades. They have been able historically to manage through supply chain constraints relatively well. In past quarters, people have become very anxious into the report, given a lot of negative supply chain data points out of Asia. They've usually managed through that pretty well, and I think they're going to do it again tonight. And then also keep in mind, they are going to be increasing the buyback and the dividend this evening as well, which they usually do with their with the March quarter report. So you're going to have increased capital return, and they should be able to deliver. Like I said, I don't think you're going to see a big drop off in earnings momentum from the company. I think it's going to be pretty status quo for them, which is why it's been such a haven stock.
Adam, thanks so much for joining us. Adam Crisafulli of Vital Knowledge Media, thank you for your time. Later today on Bloomberg Technology, an interview with the CEO of Qualcomm. That's at 5:30 p.m. New York time. This is Bloomberg.
When you think space, you probably think one space agency that travels under the radar is ESA, which is surprising considering what the European Space Agency has achieved and how vital it is to the global space industry.
We've collaborated with pretty much everybody who is involved in space exploration.
ESA wants to be a leading force in furthering humanity's mission into space.
Commander Ground, do you copy? Copy.
If we want to have successful human missions to Mars, we are going to have to learn to live and work off-world in a different way. The place where we are going to learn to do that is on the moon.
Can ESA help humanity take its next giant leap?
Front Row, exclusive interviews with the most influential figures in finance. Lloyd Blankfein.
Deflation is a terrible thing. Inflation you could tolerate.
Kathy Wood.
Tesla will be in the pole position to dominate.
Jeremy Grantham.
We've had a very, very abnormal honeymoon Goldilocks period.
First available on the Bloomberg Terminal, then on Bloomberg Television and Bloomberg.com. Front Row, the best seats in the house for business's greatest minds. However you get your news.
This is Bloomberg Daybreak with Lee.
On Bloomberg Radio.
Welcome to Daybreak Australia. This is Bloomberg Technology. This is Bloomberg Green.
On TV, radio, and the web, this is Bloomberg.
After the outbreak of the war, we see new cost price coming up, and that's obviously one of the challenges for the second half of the year.
That was the CEO of Carlsberg speaking to me a little bit earlier on today. Earnings season very much to the fore here in Europe. Tom Keene joins us now to tell us what is on his mind ahead of his programs today. And today, the FX story certainly taking a lot of the headlines. Tom, good morning.
It is. It's really front and immediate in a huge day of news flow. You mentioned earnings, Apple and Amazon this afternoon, even more important after what we saw from Facebook. But, you know, what I see here, Anna, is a yen that's absolutely moving, where you now have Ministry of Finance jawboning on extreme concern, etc. And what's so important is the knock-on effects. It is not just about yen and dollar. There's lots of other knock-on effects which drive euro to a 104, drive sterling down to a very quick 124 handle. That's important.
Tom, FX strategist, Win Thin among your big guests today. Who else do you have?
We got Win Thin here on foreign exchange. We're really efforting that story right now, but we have the chief financial officer of Ford Motor, which will be very interesting after Mari Barra yesterday.
Absolutely. Tom Keene, co-anchor of Bloomberg Surveillance, thank you so much. Someone actually wrote in to me earlier saying Tom's definitely going to talk about standard deviations and the yen today. So looking forward to those conversations coming up on Surveillance. Now, as for what else we are watching, of course, it also is still earnings season. That's a big driver in the equity market as we continue to watch FX with great interest. Tech, more of them coming after the bell. Of course, Meta did really well yesterday. So what's the read-through going to be to Twitter? And do we actually even really care about the fundamentals of Twitter when Elon Musk is taking the company private anyway at $54.20 a share? It'll be interesting to see, though, depending on the results, how good of a price $54.20 actually looks. We'll, of course, also get results from Apple. It's expected to report a record-setting non-holiday quarter, but a lot of focus will be on the supply chain given recent lockdowns in China. Then for Amazon, if Microsoft is anything to go by, AWS, the cloud business, should do really well. But the questions really surround its core e-commerce business, which is dealing with a lot of higher costs from freight and shipping to labor. So growth is expected to slow. A lot of numbers we'll be watching post-market.
Yeah, Kaylee, and when we talk about that tech, how much of it is a beacon of what's happening on the macro basis? And speaking of, I'm watching those U.S. GDP numbers coming out 8:30 a.m. How much damage did the Omicron variant do? How much inventory damage is really being done? A lot of the expectation here is that you are going to see a little bit of a slowing of growth in the first quarter, but a lot of economists, analysts saying that this is temporary. Of course, we're going to see the market reaction off of that, Anna.
Absolutely. So we'll focus in on the GDP numbers. I'll keep watching what's going on with the European gas story after we saw Russia blocking exports of gas, of course, to Poland and to Bulgaria. The question that still hangs over the markets is, will other markets, other parts of Europe be next? And can we have some clarity, please, on what exactly European companies that want to buy that gas, which is still allowed by the sanctions, how they can pay for it? Because they don't want to break the sanctions. They don't want to get in trouble legally. And there's a lot of lawyers, as we were hearing from Maria today earlier on, working on getting us a little bit of clarity as to what is allowed and what is not. When do you consider your debt paid? Is it when the euros leave the European bank account and arrive in a euro-denominated Gazprom bank account? Or is it when Gazprom Bank takes those and turns them into rubles? Anyway, that is the story on gas. We're also watching, though, Kaylee, whether Europe will decide to follow the US lead and ban Russian oil. And that does seem to be something that, according to our reporting, the Germans are warming to the idea of, which would be, at least symbolically, something of a step up.
Warming to the idea of doing it slowly, though, and I think that's really the key. This would be a gradual cutoff of Russian oil imports, not a cold one outright. And it's interesting to contrast with some of the calls we have gotten from strategists and analysts on the street. JP Morgan saying if you were to see a hard stop of European oil imports from Russia, Brent could go to 185. If it's done gradually, though, that may give the market a little bit more time to digest exactly what it means and for those barrels of crude to go elsewhere like India and China. So definitely something we'll keep an eye on.
I remember talking to that same strategist. We had that conversation, didn't we, with the strategist who put together that research report. And she was emphasizing how it will be all about the detail to link what any oil ban would do to the oil price. So we'll certainly focus on that detail for you. That is it for the early edition. Surveillance still ahead. This is Bloomberg.
When you think of cutting-edge technology at sea, you might be thinking of stuff like this. But there's an incoming revolution on the high seas that isn't quite as sexy, but could be significantly more impactful.
Container shipping is the key component of global trade. About 80 or 90% of all the world's goods are transported at sea at some point.
But there's a significant unseen cost to the modern era of global commerce.
About 3% of all the world's CO2 emissions come from shipping.
3% may not sound like a lot, but that's roughly comparable to the entire CO2 output of Germany. Since reducing trade isn't a likely option, what about a technological improvement to help reduce the emissions from these well-stocked maritime behemoths?
We've had 2 years of helicopter money, but now we're paying the price for it with higher inflation.
At some point, the anxiety around the Fed will lead to a greater scare of recession.
It could get worse if the Fed moves as fast as it's telegraphing.
This very pessimistic sentiment environment does provide some support for the market here.
The question you should ask yourself is, where can I find safety in the world?
This is Bloomberg Surveillance with Tom Keene, Jonathan Farrow, and Lisa Abramowitz.
Live from New York City for our audience worldwide. Good morning, good morning. This is Bloomberg Surveillance live on TV and radio alongside Tom Keene and Lisa Abramowitz. I'm Jonathan Farrow. Futures up by 1.6% on the S&P, helped out by Meta, Facebook, knocking it out of the park. We can talk about that a little bit later.
Nice, John, Meta.
Dollar yen, 130, Tom. That gets your attention, mine and Lisa's. What a move in that currency pair.
It is an extraordinary moment. Stay with us, folks, through the morning. We're going to give you the best coverage we can on this international debacle. John, I'm going to be controversial right now. I'm going to link in Matt Levine of Bloomberg's phenomenal effort on Bill Wang with the Japanese Ministry of Finance. Wang was and MOF is trying to corner a market. Wang tried to corner 10 selected stocks and move them up in a leveraged way. And as you know, John, we talked about this before the show, Japan's government is trying to corner the JGB market by buying in more paper, keeping control of the yield. What's the difference?
The BOJ, I think, probably a little bit more amped than the Ministry of Finance, because the BOJ and the action of the BOJ in total conflict with the concerns of the Japanese Finance Ministry. On the same day that a minister, an official from the Ministry of Finance in Japan is saying they're extremely concerned about the moves in FX, the Bank of Japan is offering to buy an unlimited amount of Japanese government bonds at 0.25% to protect that ceiling, Tom. Those two things are in total conflict this morning.
And what's so important here, folks, is a relative crisis. It's not 2002. Enda Curran and our team in Japan have a fabulous must-read this morning on this, the effect on Japan. And Kuroda John, then at Ministry of Finance, a long time ago, dealt with a 135 yen. He's used to this, except it's not 2002. It's a whole different set of cards this morning.
Abramo, you can't have it both ways.
And that seems to be what the market is basically saying. And we're going to go with the fact that you're not going to support the value of your currency. It also is sort of escalating on itself as a lot of investors don't view the yen anymore as a haven bet. And this is a game changer. It used to be the haven trade. Now it's not. Now it seems to be only the dollar, which is a reason why you're seeing strengths that we haven't seen in some cases overnight. since 2002.
And it's not just the yen, it's sterling too, and it's the euro. Earlier on this morning, Lisa, euro dollar, a 104 handle.
Wow.
Just shocking. And this really comes as the sort of conflict over gas and oil embargoes potentially on Russia heat up. Divergence. Shocker. Some people are not going to want to withdraw their ruble payments from Russia in order to actually get gas and oil. And that definitely is leading to a lot of concerns.
I think we should leave that Jonathan Ferro banner up over Lisa Browit's face. That works for me.
It's good.
Didn't that work
like
for you,
it,
Tom?
you know,
I like that too, but she cut
noticed
that.
it, you know.
Once upon a time, the two faces merged, I think. Someone had a technical fault at home. That was scary.
We're blaming everything on David today on our
Futures
team surveillance.
at 1.6% on the S&P 500. On the NASDAQ, up more than 2 full percentage points. Facebook knocking it out of the park relative to expectations, and that stock was so badly beaten up coming into earnings. That's helping the NASDAQ get a little bit of a lift.
Yeah.
Yields coming a basis point, 281.67. We've talked about the move in the FX market. Lisa, on crude, 102.22.
I can't get a read on crude right now because there is so much uncertainty, and we are helped out by the release from the Strategic Petroleum Reserve. What I'm watching today is a slew of economic data coming out in about 2.5 hours' time. 8:30 a.m. we get U.S. first quarter GDP. It includes core PCE, which is leading to the highest levels going back to the early 1980s, as well as initial jobless claims. It is expected to come in very light. The analysts expect about a 1% GDP on the first quarter, with actually Tom Porcelli of RBC expecting a contraction. But a lot of people are saying it's a head fake because of trade discrepancies. We'll be watching that to try to get a sense of how much weakness or how much strength there is. Today, President Biden is speaking at 10:45 a.m., talking about what the U.S. plans to do to help Ukraine. We also have UN Secretary General Antonio Guterres meeting with Vladimir Zelensky, president of Ukraine. And this comes, honestly, as we saw a complete about-face from Germany, John, basically saying that they will provide heavy weaponry to Ukraine after previously saying that would be an escalation. It seems like the gloves are coming off a bit in certain areas where they were on before. And today, we do get that earnings parade you talked about last night. Meta, Facebook, really blowing certain aspects of the earnings report out of the water. However, still a very low bar for them to sort of step over. I'm very interested to see Amazon, AWS, their web services, as well as Apple. What does Apple say about the shutdowns in China, John? How much will that impact and possibly interrupt some of their supplies?
Looking forward to those earnings after the close. The team will lead you through that. And Twitter, of course, before the opening bell a little bit later this morning. No earnings call, given the impending transaction between Twitter and, of course, Elon Musk. There is a massive move in this FX market. The dollar index, 103, and came pretty close to 104 earlier on today. Joining us now is Chris Ferrone, partner and head of technical macro strategy at Strategas, a Baird company. Chris, let's just start right here. What is going on in this FX market?
I mean, it's funny, John. About a year ago, I wrote something to clients that said we were about to enter the golden era of macro investing again. And I didn't know how prescient that was going to be, because what we're seeing right now in the macro, we haven't seen in 30 or 40 years. What's playing out in yen right now is so reminiscent of what happened, as you know, in September of '92 with Bank of England and pound. The Bank of Japan's fantasy that they can keep a lid on 10-year JGBs at 25 basis points, the currency market's laughing at that. With German yields near 1% and U.S. yields near 3%, I think the likelihood that this cap on JGBs at 25 bips holds is a fantasy at this point. And the outlet for this is the currency market. This is the currency market vigilantes coming for the Bank of Japan.
Okay, is there a George Soros out there, Chris? You know, I don't want to put you in hot water with Jason Trenner, but can you identify 2022's George Soros?
You know, Tom, I can. I'm sure there's a number of macro guys out there who are following this trend, who have been on this early and who are pressing this. But I think the bigger picture here is, you know, what relationship has been severed over the last 6 months, right? For the last number of years, every time yen weakened, Japanese stocks went up. That has not happened here, right? So the market is saying this type of weakness in Japanese yen is not as bullish for the equities as it's been in the past. That's a very important distinction.
Chris, very importantly, and I'm looking at tangentials like you did in 1992 with John Major and Sterling, and I'm looking, for example, at Sing Dollar back to 1996. And folks, this is a secondary market. That number means nothing, 1.0610 yen Sing Dollar. But the answer is we're now strong Sing Dollar back to 1996. Those are the knock-on effects. What technically do you look at to show you where yen is going?
Well, first, let's just say in terms of knock-on effects, I think there's one place we need to look above all others. What's happening in offshore Chinese yuan these last 4, 5, 6 days is also pretty remarkable. You've taken yuan from, let's call it 640 to 660 in the last week or so. I don't think, given the weakness we've seen in euro, given the weakness we've seen in sterling, given the weakness that we've seen in yen, that the Chinese can just sit back with the strongest currency in the world. So big move there. It's a little bit reminiscent of summer 2015 into 2016 when you saw a pretty major devaluation there. In terms of yen targets, 130 was our target. So we're there. I think I need to reassess and say, okay, longer term, is this headed to 150 or 160? I think the bigger takeaway, Tom, for investors are, there's very few people in this business who have managed money with yen north of 130. This is a different macro regime.
Chris, you said you might have to reassess to 150 or 160. What would make you do that? What kind of capitulation would you have to see in markets from a technical trend?
Well, I think in the very short term, you do have some capitulation sentiment. If you look at any of the survey work, I mean, people are basically expressing bearish views on sentiment that are in like the first percentile of all observations historically. So some pause here in this 130, 135 zone, I don't think would be a surprise. But the longer term chart continues to point to 150. I think ultimately that's where this is going, Lisa.
Chris, this is a problem for Japan. Why is it a problem for anyone else?
Well, I think number one, the idea that weaker yen, as we talked about, is going to be bullish for Japanese stocks and definitely is being put to the test here. I'm reminded of when pound broke in '92, it ended with England recession. So I don't want to forget that here in terms of the Japanese example going forward. And I think most importantly, as we talked about what's going on with Chinese yuan, I just don't think the Chinese can sit back and maintain the yuan where it's been trading for much of the last 2 years. So I think you're going to see persistent weakness in yuan. This is a new macro regime. And the risk premium, I think, has to go up everywhere when you're seeing these type of moves.
Chris, great to catch up, buddy.
Great brief.
Perfect timing. Chris Verone there, strategist. Didn't even get to talk about the stock market, given what's happening in foreign exchange. If you brought up a chart of dollar China right now, dollar yuan, just the move on the right side, it's just explosive, Tom, in many ways.
Well, they're
661.
This is why it's hard to give a target. Mr. Verone just mentioned weak yen 130 to 150, which for 99.2% listening and watching is unimaginable. I'll take the point of 1992 and others, and not just sterling, John. I would look at emerging markets. The knock-on effects here are not just about DXY. John, let me get this up right now. This is important and timely. I can do this on the Bloomberg, folks. DXY Go, 58% euro, 14% yen, 12% British pound. That's the DXY. But there's a whole other world out there, John, like I mentioned, Sing Dollar, which has knock-on effects on this. And you get into a complexity or almost a coordination where you don't know what's going to break.
The stance, Lisa, of the Ministry of Finance in Japan and the Bank of Japan this morning, just totally incompatible.
And right now, as we've said, basically a weaker yen is not helping the economy. The importance of this, though, goes so far behind just the Japanese economy, because also we're talking about one of the biggest buyers of U.S. treasuries and a possible inability to play in the global market the way that a lot of these investors have in the past.
It's foreign exchange. We need to talk about Meta, too, up 17% in the pre-market. Equity futures up more than 2 full percentage points. A massive earnings day coming up, with Amazon and Apple on deck. From New York City, for our audience worldwide, this is Bloomberg Surveillance.
Keeping you up to date with news from around the world with the first word, I'm Lisa Mateo. Bloomberg's learned that the U.S. has lifted some restrictions on sharing intelligence with Ukraine. The expanded sharing is intended to help Ukraine defend and potentially retake territory in the east and south, where Russia has renewed an offensive. The top Republicans of the House and Senate Intelligence Committees has urged the restrictions to be lifted. The Bank of Japan has sparked a sharp slide in the yen by doubling down on bond purchases. The central bank said it would buy an unlimited amount of bonds at fixed rates every business day. Now that prompted the yen to hit a 2-decade low against the dollar. Cities across China are rolling out swift measures, from mass testing drives to lockdowns for just a mere handful of coronavirus cases. They're trying to keep flare-ups at bay and avoid the hardships endured by Shanghai. The responses reflect the growing stakes local governments face in wrestling with the highly infectious Omicron strain. In New York, the billionaire behind the collapse of Argo's capital, Bill Wang, has been released on $100 million bond. Wang and his former CFO, Patrick Halligan, have been charged with fraud. Federal prosecutors outlined what they called a vast criminal scheme to mislead banks and manipulate markets. Both men have pleaded not guilty. And shares of Facebook parent Meta platforms are soaring. Facebook's main social network added more users than projected in the first quarter. That potentially could stave off concerns that the company is losing momentum as a new generation flocks to younger sites like TikTok. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Lisa Mateo. This is Bloomberg.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
When you think space, you probably think one space agency that travels under the radar is ESA, which is surprising considering what the European Space Agency has achieved and how vital it is to the global space industry.
We've collaborated with pretty much everybody who is involved in space exploration.
ESA wants to be a leading force in furthering humanity's mission into space.
Commander Ground, do you copy? Copy.
If we want to have successful human missions to Mars, we are going to have to learn to live and work off-world in a different way. The place where we are going to learn to do that is on the moon.
Can ESA help humanity take its next giant leap?
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
Why do the biggest names in business choose Bloomberg?
That is a great question.
It's a great question.
It's a great question.
Great question.
Great question.
Great question.
Great question.
That's going to be the best question I get all night.
I'm glad you asked that.
Bloomberg Television. Top experts. Great questions. Main season is here.
A moment of multiple crises.
Bloomberg is fastest with the numbers and analysis.
You do have some good news and bad news.
It's a good time to own volatility.
Bloomberg, the fastest numbers and analysis you trust.
The US yields push higher, the dollar yen could push higher. But of course, if we move into the end of the year, people are beginning to think, well, the US economy could slow. If yields begin to turn lower, in a way, that could take the Bank of Japan sort of off the hook, if you like.
Jane Foley of Rabobank, the head of FX strategy. What a move in the Japanese currency from New York City this morning. Good morning. Equity futures up 1.4% on the S&P 500. On the NASDAQ, the story of Facebook sending the NASDAQ 100 higher, much higher by almost 2 percentage points now. Here are the moves in the FX market. Euro dollar 105, just 104 a little bit earlier, 105.13 with negative 0.4% on that currency pair. Dollar yen through 130 TK for the first time in a long time.
Yeah, it's a huge deal here. We're going to really focus on Japanese yen and the knock-on effects globally, but so many other stories out there. Again, Apple and Amazon later today. Right now on the war, Jack Fitzpatrick is in Washington, Maria Tadeo in Brussels. Maria, I do not mean to be flippant, and this is with great respect to all of those at risk. Who is winning this war right now?
Who's winning the war, Tom, is a very difficult question to answer. If you look at the Russians, they say, well, we are going to win the war and this is not over. It's too early to make a final assessment on this. And Tom, by the way, the next 10 days will be incredibly crucial. We know that for the Russians, Victory Day, I know we talk about this all the time, but it is incredibly important. May 9th, Vladimir Putin has pressure to go on the Red Square and, of course, show that there is a victory in Ukraine. He's not going to stop until that day. It is so important for the Russians is the Soviet celebration in a context in which the country says it is denazifying Ukraine. When you look at Ukraine, they'll tell you we're already winning in a sense that Russia has not been able to take any major city. Mariupol is still standing. And by the way, the east of Ukraine, we knew that was going to be the battle for Donbass. This is going to be the most crucial time in this war potentially, but Ukrainians are still fighting. So as long as they have weapons, Tom, they're not going to surrender. That is clear as day.
How do the weapons get to the Ukraine army?
They're going through Poland, they're going through the Czech Republic, and they're going through a lot of neighbors that won't say it openly because they worry about being targeted by the Russian army. We've seen that before. Warnings from the Kremlin saying if you supply weapons, you become belligerent in this war. Stay out. Yesterday, again, another warning by Vladimir Putin. So it is coming from those Eastern European countries. We know Poland is a major distribution hub, but it's not the only one. Having said that, there's a lot of secrecy now in terms of how they get in there, but clearly they're there. The Ukrainians are still fighting, and it's not their weapons, it's the weapons provided by the allies.
Jack, Maria brings up a really good point, which is the red lines that used to be viewed as escalation in terms of which weapons were being supplied to Ukraine have gotten kicked out again and again. What's the new red line that we're going to hear from President Biden when he gives his speech today, later this morning?
I don't know that we're going to hear red lines about limits on the U.S. involvement, but we are going to hear more details on what we're sending and what he's asking for Congress. In terms of exactly what we send, I've heard skepticism from lawmakers on fighter jets. Obviously, that was a request that Zelensky made a while back that Democrats in particular thought the focus should be on smaller arms, and they feel that the Javelins and Stingers and the Switchblade drones seem to be working well. But this is going to be a broader speech from Biden on longer-term aid. There's going to be the military component, the economic component. It sounds to be fairly wide-ranging, this request they're going to make from Congress. Antony Blinken told lawmakers yesterday he expects this would get into the global food aid issue, the maybe staged possibility of getting U.S. diplomats back, eventually reopening an embassy in Kiev. So this is going to be a focus on both the military, economic, and diplomatic components of all of this.
Before we let you go, Maria, I do want your take on what the latest is with respect to oil and gas embargoes on Russia, given the fact that yesterday Poland and was among those, also Bulgaria, that got their oil shut off by Russia. Has there been any cohesion with the allies in the EU about how to proceed from here?
Look, I think there's two things. We're not going to see any cutoffs until mid-May. Poland, Bulgaria, these are very specific cases. Of course, it is a warning shot by the Russians of what they could potentially do. But I don't think we're going to see the same applied to Italy or Germany until mid-May. That is when the new ruble payments are due. Now, in terms of possible embargoes, well, by this week, the end of the week, it is almost understood here in Brussels that there will be a light embargo on Russian oil. But the question, and this is still very much the issue, is the gas. This is not an oil story, it's a gas story. And for the time being, there's a lot of confusion in terms of, A, is that going to continue to flow? Should the European Union front run the Russians and cut it off before they get cut off? And then two, how do you pay for this? Because the Commission, the head of the European Commission, still says if you pay rubles, that is in breach of sanctions, and you could be in a big problem today. So for a lot of European companies, they don't know how to navigate this. And of course, the lawyers are going to be working overtime on this because this is a serious question and they don't have the answer for today.
Maria, great work as always. Maria Tadeo there out of Brussels, Jack Fitzpatrick down in Washington, D.C. There are many things I don't understand, Tom, but this story is certainly up there. I don't get what's going on here or what will happen. I have no idea about that either in the next month.
No, I think in the next month we don't know. There's too many variances, and you know, I look at the war and I say this with immense respect. We're right down to basic war coverage, John, of who's winning. I look at the zeitgeist this morning. I don't think we know.
Many people focused on the energy story, Lisa, and who's next? I think that's the big question. Poland, Bulgaria, who is next? And what did Poland and Bulgaria do that others did not do? Why were they cut off and why weren't others? I think we still need some more detail on that.
And how much is this because they're smaller buyers and they perhaps can be pushed around a bit more than the likes of Germany? Also yesterday, Germany coming out and saying that they're more okay with, or at least according to reporting by Bloomberg, a phased-in removal of oil imports from Russia. And I wonder, okay, well then who's going to bite first? If they're telling Russia,
I know,
okay, we're not going to buy oil from you eventually, well, does that basically remove a lot of the incentive for Russia to keep supplying said oil?
Well, on the oil situation, Russia just gets to reroute the crude, right? They get the time to think about where to reroute the crude. Ultimately, that's just optics. What does that actually achieve? You phase in an oil ban? What does that achieve?
Well, and even with Bulgaria and Poland, right, they said that they're going to get some oil and gas from their neighbors. Okay, well, where did that come from, right? I mean, all of these things are technicalities, and at the same time, you are hearing of some companies and borrowers lining up payments in rubles to keep going with some of the supplies from Russia.
For the Europeans right now, particularly the Germans, Tom, it is both tragic and utterly embarrassing. Tragic because of what is happening on the ground, and embarrassing because they continue to fund it.
Well, the funding is there, and I think the granularity, John, as you and I have talked about, is really, really important on funding. I'll be honest, John, I'm watching Italy. I think that's a sidecar story here, but it bears. I really wonder how Draghi's going to react to what we see on rubles in Italy.
Futures right now up 1.4% on the S&P 500, a bounce back on the Nasdaq up 2%. Facebook, Tom, or as Lisa would call it, Meta.
Hey, I was wrong. It's a big story. I was wrong.
A big move in this pre-market from New York. This is Bloomberg.